How you doing? How you doing? I just flew in from Sydney after presenting for 2 whole days solid there, speaking non-stop, jumped on a plane, and I'm up here. So I want to acknowledge you guys for staying here, staying this late, because I know it's late. I know you've had 2 days jam-packed full of stuff that's just like melting your brains, correct? Yes. Have you had some awesome speakers? Yes. Right? I know a lot of these guys, I know a lot of their information, and it's just brilliant. You're probably almost spoiled for choice, aren't you? Yeah. Right? But who here secretly really loves property? Yeah. Show me. Yep, property. I am going to show you some incredible things around property. Let me just ask, because some of you have actually heard me speak before, haven't you? Who's actually heard me speak before? Quite a lot of you. Okay, great. All right. Well, I'd like to welcome you guys. I've got some really interesting things to talk about tonight as well. Things I haven't talked about before. Jamie's actually given you a little bit of a teaser about so far, hasn't he? Yes, he has. He wasn't supposed to give you so much, but I think he's just so excited about the opportunity. We've had people on the ground for literally 12 months researching, talking to people, finding out the best opportunities, taking all the risk out, and then wrapping it up into a system. So we've got an incredible thing to share with you guys today, right? Now, before I do that, I've got to do the standard thing first, and that is I've got to do a standard disclaimer. While every care has been taken to ensure the accuracy of the material presented, property directors, employees, presenters, or any of its representatives will not bear any responsibility or liability for action taken by any person on the basis of the information contained in this seminar. The content is for information purposes only. It is recommended that no person make an investment decision until such time as their individual needs, desires, risk profile have been assessed by a qualified professional. Right? Standard thing, I'm here to give you lots and lots of information. I'm going to expect that you take lots and lots of notes because you don't know what piece of information I'm going to give you that may trigger you to a new idea, a new strategy, and a new outcome. Does that make sense? Let me hear you say yes? Yes. All right. So take lots of notes. But I want to make it clear because I know exactly what's involved in giving financial advice. I'm not here to give you specific advice. I don't know you well enough. I haven't spent half a day analysing your situation to make recommendations. Does that make sense? Say yes? Yes. All right, brilliant. All right, a little bit about my background. Some of you have seen this. Basically, you can tell from my accent I'm not from here, right? Yes. Sweet as, bro. Give you some LMP. No, the Kiwis got that. All right. No, I'm actually Hungarian. Can you tell? See, I'm always hungry. Always hungry for information, actually, as well as Scotch and lots of food. All right. But you see, here's the thing. I come from a non-English speaking working class background, right? The reason I'm telling you that is I probably had the worst set of belief structures about money embedded into me that you could possibly imagine. Number 1, non-English speaking. Number 2, non-educated. Number 3, subsistence farmers. Number 4, are we up to 4? Roman Catholic. Number 5, coming from a communist background. Can you possibly imagine any worse combination of how money is evil and people with money are bad and it's all, everyone's socialist, communist sort of thing? I had to actually work really hard at changing those belief structures. And I acknowledge you guys for being here because working on yourself is literally one of the hardest things you could ever do. It's a never-ending journey, but the rewards are incredible. Does that make sense? All right. So what I wanted to tell you about was that a little bit about my story, just a short snippet, is that I was taught to get a good education, to study really hard, then get a good job, work really hard, and then everything to be sweet as. Yeah, the gold watch, thank you. But is that what really happens in life, yes or no? No, it doesn't. And in fact, the GFC clearly proved the fact that it doesn't give you exactly what you want. In fact, there are people that are working incredibly hard, and whatever happened in their life, they lost their money, they lost their job, whatever happened. Does that make sense? All right? I looked at my parents. They worked incredibly hard, and I thought, you know what? I'm going to make my money work hard. I'm going to make my brain work hard. I'd rather not make my body work hard. Who thinks just swapping time for money is not the best way of doing things? All right? I've actually taught for lots and lots of different groups for the last 15 years all over the planet. I actually started my life as an IT instructor. Before that, I actually trained as a high school science teacher. So I've actually worked for the New South Wales Department of Education. That was actually one of my first jobs, working for them. I've actually got a teaching degree. I love teaching. But I've taught in areas of science, I've taught in areas of IT, I've taught in areas of personal development, I've taught in areas of business, property and finance. So I teach in a whole range of different things. But one of the things I love the most is property. Do you want to know why? The reason I love property so much is this very simple reason. Where's my flip chart? Most Australians, would you agree, invest in three main asset categories. Number one is shares. Number two is business. Number three is property. Now, I used to work at a company called Rothschilds. Anyone heard of Rothschilds? It's a merchant bank. So I set up and manage some of the largest networks for merchant banks, and I work closely with business units to develop the platforms they needed. I had to understand their business to make it work for them. Right? It took me a long time to get there, right? Starting off working at Kmart. As you can imagine, it's a long journey to get there. But what I found was that some of these people, no matter how incredibly academically smart they were and savvy, they sometimes, even with their systems and knowledge, they still lost money. To me, I realised that I didn't have a good enough system around shares to give me exactly what I wanted, and also the emotional roller coaster didn't suit me. Does that make sense? Yes? All right, business. I knew a lot of people who were actually in business, and I learnt this the hard way from being as a bank manager. No matter how hard you work, no matter how hard you try in business, doesn't always work. In fact, 95% of businesses go bust in the first 5 years. So I just thought to myself, that is not a game for me. And then I looked at property. And the thing I loved about property the most is my parents bought a property in an outer suburb of Sydney that at the time was dairy farms and orchards. No one lived there, very few people lived there, but they bought this house for $42,000 in 1976. Today that house, they built a freeway out there, that's actually a tollway, beg your pardon, it's worth about $650K in 2010. It's a suburb called Carlingford. They've made, well, my mother passed away early this year, but they made $600,000 passively. All their goal was to get a roof over their family's head, work hard, put food on the table. Who understands that? Right? This is more money than they could have ever have saved, and literally what anyone else could literally save. Would you agree with that? And they weren't experts, but all they did was they bought a house that they could afford and looked after it. Who thinks that's a model or a formula that they could do as well? Well, I asked myself this question. Could I do that model not just once, but twice, 3 times, 4 times? And that's what led me down the path of property. And what we're going to be showing you today is some amazing different ways of doing property, because all of you actually have some beliefs about how property is done. I'm going to show you some different ways. All right? And what I'd like you to do is real quick, I want everyone just to, because I know it's getting late, everyone real quick, just stand. Everyone stand, up, 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 up. Everyone stand, cross your arms, quick, cross your arms, cross your arms, cross your arms. All right? Cross your arms. Look across. Has everyone got their arms crossed? Yes? 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 Come on, let me hear. Yes? Yes? All right. Look down. Which arm is on top? Yell it out. Well, some people have got left, some people have got right. Which is the correct arm? So hang on. What you're telling me, there's more than one way to achieve your outcome. Is that what you're telling me? Quick, uncross your arms. Flap your fingers around like they're butterflies, recross them the other way. Quick, don't think about it, do it. Some of you can't. Some of you are struggling, right? Here's my point. Look around. Is your arm still crossed? Yes. Is everyone else's arms crossed? Yes? Yes. All right. Because they're crossed, have you still achieved the outcome? Yes. But you've done it a different way. You've done it a new way. It feels different. It feels uncomfortable. But does it achieve exactly the same result? Yes or yes? Yes. If you did it this new way 100 times tonight for homework, because remember I'm a science teacher, right? If you did it for homework, if I then asked you tomorrow, if I saw you on the street and said, quick, cross your arms, do you think you might suddenly do it the new normal way? Yes or no? Yes. For some of you, the answer is yes. Some of you are quick learners. Some of you have some long-held beliefs or habits that are very difficult to break. Who understands I'm not talking about property at the moment? I'm talking about anything else in life. Great, grab a seat, grab a seat. Give yourself a clap, well done. All right, my point is this. The way you've learned how to do property may not be the best way. It may not even be the only way. We've all been taught this concept of get a property, negative gearing. Who's heard that? Build a portfolio, negative gearing. You work yourself to the bone trying to pay for the property and desperately hang on to it. Would you agree? Yes or no? Yes. What if there was a way to capture growth in property without having a loan? Who thinks that'd be pretty impressive? All right. What about if there was a way to control some assets with actually very little money? Who'd be interested in that? Who'd be interested in buying properties at wholesale? Anyone interested in that? What about if there were ways to actually not have any rates, body corporate, maintenance, land tax? Who'd be interested in a way of doing property like that? Does that sound like a different way than what you've all been taught? Yes or no? All right. So what I'm going to be showing you is some of that. Now, before I get onto that, I'm going to actually just give you a little bit of what Jamie probably shared with you, because I'm going to be talking, and this is going to be a bit of a marathon for you guys, because I'm going to be talking for about 2.5 hours. All right? I've got so much to share, I can talk for 5 days. Has anyone been to one of my advanced courses? Anyone? 3 days or more? I can talk for 5 days on property because it's so exciting. It is so, so exciting, all the different things you can do. All right? But tonight, they've only given me 2.5 hours. I'm going to cover later on tonight, how do you retire? Listen to this. How do you retire on a 55K? And remember, medium salary in Australia is just over 50K. So how do you retire on at least the average Australian salary, indexed to grow for the rest of your life, buying the approximately one Australian property, the equivalent of one Australian property? That's right. But it's not just buy a US property. Could you make a severe mistake buying the wrong US property? In fact, you could. There are some properties, and I'll tell you more about this when we get to the US, that are just a huge problem. I'll get to that later tonight. But what if you could do this? What if you could even get, and remember, the US banking system is not working. Many US people can't get loans at all. But what if we could get you a loan at up to 75%? So for the same money you'd buy one, through our system, you could buy 4. And get potentially 4 lots of uplift. Who likes the sound of that? Anyone? What about this? What if you get some of those loans? Some of you may even qualify for loans as low as 3.99%. And do you know in the US you can fix loans for up to 30 years? How good would that be for your cash flows? And the lack of stress, the feeling of calm, knowing all your cash flows for the next 30 years. Who likes the sound of that? Anyone? What about this? What about if you could buy in your self-managed fund, self-managed super fund, a property with as little as $25,000. Now that's impossible. In Australia, you're paying 30 to 50K often in stamp duty, let alone buying a whole property, let alone buying it through your super fund. Geared, listen to this, geared in your super fund. Because you know if you buy a property the wrong way in your super fund geared, right, the wrong loan, you've broken it. You're not complying with the SIS Act, right? And you're in big, big trouble. We have been able, because of Jamie and the size of our group, to negotiate with them, and they've created a loan just for our people that is compliant with the SIS Act. The SIS Act is for the Superannuation Act, okay? So imagine that. Imagine being able to buy, if you have just as little as 25K in your super fund. Even if it's not self-managed yet, that can change. If you have 25K in your super fund, you could be a property owner in your super fund. Who likes the sound of that? All right? What about, for every property you buy, each year you pocket between $7,000 to $10,000. Does that sound pretty good? Instead of, in Australia, normally it's negatively cash flowed. You're losing a whole lot of money per property each year. Imagine pocketing 7 to 10K per property. Each and every one, thank you very much, banked into the bank, right? But what about this? What if we could get you anywhere from 10 to 15 to 20 or even up to 25% yield? And what if, would you be happy with that, by the way? If you get 10 to 20% yield, who'd be happy with that? Who'd be overjoyed at that from day one? But what if I could then get that guaranteed for you to be paid every month for the next 10 years? Who'd be just ecstatic about that? 10 years rent guaranteed. Not your problem anymore. If they don't have a tenant, they get the wrong tenant, not your problem. They're paying you. When has a property manager ever done that for you here in Australia? When? Never is the answer. But what about this? What if you got a property that was earning you a 20% return? That property pays for itself in 5 years. But what if after 10 years you could hand it back, you've made back the entire cost of the property twice, you could just hand it back, get all your money back? Who likes the sound of that? How much belief and confidence would they have to be able to even offer anything like that? When has any property developer, real estate agent or vendor offered you a 100% buyback guarantee? You see, this isn't US property. This is a US property system. Say the word system. Right? You could go onto eBay and you could buy a property tomorrow in the US. The problem is that in the US, things work differently. Your whole paradigms have to change. I'm going to talk more about that later on. But where you buy, there may be no property managers available. Some of them aren't even regulated. Some of them won't even go and look at your property because of all the gang warfare in that area. Okay? So you have to be incredibly careful. This is why we have spent 12 months making sure that we actually build the right system to protect our members the most. Who understands that? Who thinks that's valuable? All right? So I'm going to be covering that probably closer to about 9:30 tonight, and I'm going to go into detail about that then. And the way we're going to describe it and show you what's possible, it will blow your socks off. Literally blow your socks off. All right? But first, I want to ask you a question. Why are you here? What are you looking for? Why are you here? Just tell me. What are you looking for? You want cash flow? Yep. What else? You want to make some money? Yes. Right? You want to do it passively? You want to do it safely? In fact, let me ask you this question. Isn't the reason that you want to invest to have a better quality of life, but rather than put all your money into whatever it's going to be, you keep much of it in the bank? Why? Because of safety. Would you agree with that? If something was going to work great, you'd put all your money in there, agreed? But you keep some in the bank. Why? Because of safety. What makes banks safe is because they underwrite their whole balance sheet with property. Do you understand that, right? Their asset is your mortgage against your property. What if there was a way to use exactly the same asset base but make 60 to 100% per annum returns? What if there was a system around that? Same security system the banks use, but the way you could do it is 60 to 100%. Who thinks that sounds pretty interesting? All right? You see, it's about doing things differently. It's not doing things this way. It's about doing things this way. Right? So, I want you to be honest with yourself. How many of you are really frustrated, upset, and you haven't got the results that you thought you'd have by this stage in your life? Is anyone honestly in that position? Who here has had some problems in life and has learned from them, and from that knowledge wish they could do things differently? Anyone in that position? All right? What I'm about to show you gives you some opportunities. It lets you literally recapture time because of the way we've structured this deal. All right? But firstly, I just want to describe the Australian deal to you. Who'd like to save over $100,000 in holding costs on a property? Does that sound pretty good? Because if 100K doesn't go out of your pocket and stays in your pocket, that's like making an extra 100K worth of profit. Who understands that? Is that a good thing, yes or no? Right? What about this? What about buying properties in a high growth area and not having to make a single progress payment for 10 to 12 years? Does that sound pretty good? Right? Come on, yes or no? Yes. This is my favorite. What if you end up buying at below 50% or more below hard cost? Not 50% below retail, but below hard cost. When was the last time you bought anything at 50 or more % below hard cost? Right? And this isn't something weird like a syndicate or a unit trust. It's just you pick a property, it's got a number, that's the one you're going to buy. It's really that simple. All right? It's an option contract, which gives you full control, and your name only goes on the title if you choose it to be, if you choose to settle. Otherwise, you on-sell it. And in the jurisdiction I'm going to talk to you about, in that jurisdiction, you don't even have to pay double stamp duty if you on-sell your option. So if you're not paying stamp duty, does that money stay in your pocket, yes or no? Yep. Is that a good thing? Yep. Of course it is. All right? But what about this? What if you could make 60 to 100% per annum return on investment? Listen to this word, consistently. When was the last time you made 60 to 100% per annum consistently for 10 years? Or 10 to 12 years? Who thinks that would revolutionize their whole wealth system? Anyone believe that? What? The rest of you didn't have your hand up. Are you earning more than 60 to 100% per annum consistently? Yes or no? No. All right? Okay. What about this? Who wants to make 10 to 20K fast cash on the way in after a couple of weeks? Who'd be interested in that? All right? What about this? If you could hang on to the property long term and make $250,000, would you like to do that? $250,000 passively, just sitting there in the background working for you. Well, first of all, let me show you what context this is in. I'm going to give you the Australian economy and property market. Some of you may or may not know this. The IMF. The IMF, International Monetary Fund, gives Australia some of the highest marks in the world. The GFC barely gave us a glancing blow. All right? The world is looking at us. In fact, next weekend, there's about 50 people from Indonesia, Malaysia, Singapore flying in to Australia to actually look at some of these deals, because they believe, they know that Australia is actually not just financially stable, but it will be financially stable and prosperous for the next decade or so. And people throughout the world want a piece of that. They want some stability and strength. Who understands that? Very important thing. Another very important thing about the Australian market is this. Who's heard of Jones Lang LaSalle? Who's heard of Jones Lang LaSalle? International property consulting firm. Every 2 years they release this index. It's the Global Real Estate Transparency Index. It measures every real estate market in the world, and what it does is it compares them from a transparency point of view, such as the legalities, the jurisdiction, the separation of parliament to the judiciary. It talks about growth, finance system, all of these sorts of things. Guess which country came number one? Number one was Australia. Why? Because the world sees us as one of the strongest places in the world to invest, one of the strongest places in the world to look after your money, one of the strongest places in the world to make sure that people get what they're looking for, and that if they have any recourse, there's no problem going to the court system. Now, there's many different things driving the Australian property prices. Many different things, but there's two big white elephants in the room. How many? Two. Let's talk about one of those, which is the supply side. Excuse me, guys. All right. So on the supply side, this is what's going on in terms of market balance. Right? Can anyone see a clear trend? Below the zero line is when Australia was in surplus, when we had too many properties. That's where the US is. In the US, they are in way surplus. All right? We, on the other hand, guess what we're in? Way deficit. Right? We went from surplus into shortage or deficit about 98. Write that down, 1998. 97, 98 was roughly when we went into deficit. So when people say to you, oh, Australian property prices, the bubble is going to burst, well, if you look at any of the major fundamentals, that's a real problem to explain, because we have such a shortage of properties. According to the ANZ Bank, we are 250,000 houses short right now. According to the Housing Institute of Australia, within the next decade, we will be 500,000 houses short. For a population our size, that is unprecedented. It is also, listen to this very closely, a problem that cannot be fixed. Now, if you understand basic economic principles of supply and demand, if it's a problem that's only going to get worse, guess where property prices will go? Up or down? Up. Can you see that they're going up, not just sort of straight line, but they're going up almost logarithmically, sort of exponentially. And the situation's getting much worse. In fact, this is an article from a Victorian newspaper called the Herald Sun. And basically, if you want to become an automatic millionaire, look at this. You buy one house in Melbourne, and I'm not flogging Melbourne in particular, but it's got some of the strongest economic fundamentals in Australia. A Melbourne house, an average Melbourne house, according to BIS Shrapnel, which is one of the leading economic forecasters in Australia, it will be worth about $1 million. You just hang on to it. Based on the last 43 years worth of growth, it'll just become $1 million. So if you want to become a millionaire passively, just buy one in Melbourne, sit back and wait. But what I'd like to show you more specifically is this. Look at the shape of the curve here. Would you agree that for the first part, it's not a very shallow angle, but later on it gets very steep? Does that make sense? When does it move from being fairly shallow to very steep? Happens about here. What happens about there? Can you see it's fairly shallow there, but very steep there? What happens right about there is about 1997, 98. What happened in 97, 98? Who remembers? We went from surplus into deficit. When there's not enough of something and too many people want it, what is likely to happen to the price? Goes up. We can't fix this situation on the supply side. It'll actually only get worse. What do you think will happen to the property prices in Melbourne over the next 5, 10 years? What do you think? Go up a little bit or a lot? A lot. So will some people make a lot of money? Yes or no? All right? That could be you. That's not my choice. It's your choice. But in fact, is it just Melbourne? Look at this graph. Have a look and you tell me which decade, starting which year, was the greatest for all cities. In fact, so much growth that it was more than the last 4 decades preceding it added together. Which decade, starting which year? Sydney, Melbourne, Brisbane, Adelaide, Perth, the major cities in Australia. It started after 96. What year is the year after 96? 97, 98. Right? So it didn't just happen in Melbourne. Where did it happen? It happened everywhere in Australia. We went from what? Surplus to what? Deficit. And was that reflected in the prices? Yes or no? In fact, look at this. Brisbane, 1996, $132,000 median price of a property here in Brizzy. How many properties should you have bought? Should you have not gone out for a whole year, every weekend, stayed at home, eating 2-minute noodles, saved up 1 extra deposit, bought 1 extra property? Would you be in a very different position today? Yes or yes? Yes. Of course you would. What if you could go back to 1996? Who'd want to do that? Who'd want that opportunity? Well, let me tell you, I'm going to show you a way to do that. I'm going to show you a way to capture 10 to 12 years worth of growth as if it was today. And that's what we can do with this incredible structure of the deal that we've actually put together. And I'll show you that in a moment. Now, I said there's 2 elephants in the room, didn't I? Right? Supply side is one of the big problems we're facing. That by itself will drive up property prices no end. Does that make sense? All right? But number 2 is the other elephant in the room is demand side. Demand side is this. At the moment, we have got a migration surge coming into the country. We have had one of the biggest migration surges since World War II. All right? Our long-term trend for migration coming into the country is roughly 140 to 160,000 net immigrants. That's what it normally is, long-term trend. According to this data from BIS Shrapnel, back in 2008, it was 215,000. That was 2008. 2009, what's the number there for 2009? 285,000. In 2010, guess what the number is? Targeted towards. 300,000 is where it's moving towards. Now, I want you to think, if we have roughly double the amount of population coming into the country, is that going to place some pressure on housing stock? Yes or no? Right? And a lot of the people coming into the country, because the government's being very selective, which is great, a lot of these people are educated, they have money, and many of them are what are called employer-sponsored. Because is our economy growing strongly? Very strongly. In fact, every migrant that comes actually generates more than one job in terms of all the things they buy, right? So, if we have a lot of people coming in, does that actually stoke the fires of our economy? You better believe it does. And those people that come in actually fill some of the roles that we just can't fill. We've got these huge mining jobs that are happening, not just in Queensland, but in Western Australia as well, and will soon be in South Australia in Olympic Dam. We just don't have enough people. It's ripping the young apprentices out of the blue-collar jobs, and they're getting double to triple or quadruple their starting salary as an apprentice in the mining industry, right? So that's what's going on in the mining industry. People are just cleaning up, right? So we need a lot more workers. So if you understand that not only have we got a lack of supply, but we have huge cashed up demand, turn to the person next to you and tell them what you think is going to happen to property prices over the next 10 years. Just turn to them. Tell them what you think. Just tell them. Tell them what you think. All right? Ladies and gentlemen, that's just two. That's just two of the drivers. I track about 30 of the drivers. Each one of those drivers will push property prices up. I believe we're in for one of the largest, strongest, and longest surges in property growth we're ever going to have. In fact, it may actually be the last one because the baby boomers are actually downsizing. So this current boom we're about to have, or we're actually already started, I believe will be maybe one of the last, but it'll be one of the strongest. All right? Now, what about land? Do all properties sit on land, yes or no? All right? Now, I love land. All right? I didn't used to love land because I had some preconceived ideas. I thought you only did land like this until I learnt you could do land like this. Who follows? All right? So, this is from Housing Institute of Australia data. And HIA, just so that you know, is the peak economic body in Australia for residential properties, just so that you know. All right? According to their data, in 1973, I could have bought for $20,000 odd one house to sit on a block of land or two blocks of land. Does that make sense? In 1973. Now, 33 years later, the house that sits on the land would have gone up and be worth from $18,900 to $215,000. It would have gone up 11 times. But the block of land, each of them would have gone from $9,100 to $263,000. The land went up nearly 29 times. And it's not just constrained into Sydney. Look at Melbourne. The land went up 19 times, the houses 14 times. Brisbane, the houses went up only 12 times, the land went up 20 times. And these sorts of numbers are repeated over and over again. I then went to value a general equivalent data in Victoria. This is from the Department of Sustainability and Environment. This is government data. This is from Wyndham Shire, the fastest growing local government area authority in Victoria. So Wyndham Shire. The sample size is big enough. Look at the number of houses and blocks of land. I did some numbers. I found that houses grew over the last 4 years 33%. But I found that land grew 55%. So land grew 66% faster than the houses. If it was your money, what would you prefer to do? Well, you'd like to make more money, correct? Right? So the land is actually showing you that it's going to do that, but there's a problem with land. I'll cover that in a moment. I'm sure all of you are about to say, but hang on, Stephen, there's a problem. Now, this is from RP Data. RP Data, just so that you know, has the license to interrogate every government database in Australia for land property title information, right? So all land transfers, so 99% of all land transfers go through the government databases because you pay stamp duty. Who follows that? Who understands? Right? RP Data can extract all that data. So it's probably the most thorough data in Australia. But it is not as timely. It's usually lagging by about 3 months. But that's okay because I want to see the trend. Look at this. The red line is the price of land from 2002 March to March 2010. Can anyone see there's a clear trend there? What has the land price, median price of land, been doing across Australia for a long period of time? It's been trending up. Why does land trend up? Simply because we actually don't have enough of it. But people say it's a big country. Yeah, but where the heck do we all live? Around the edges, near the water. So where we want to live, there's not as much land. Who understands that? Right? So there's a lot of competition for very limited land in those areas. Now, I want just someone to help me with this. What's your name, sir? Andrew. Will you verify for everyone, because it's a bit hard to see, but at the bottom of that chart, it says 10 least expensive regional markets. Is that correct? Yes. All right. And the equal 10th last one is Goulburn, Victoria, 100,000. Is that correct? Yep. All right. Can you guys all see that on this side? 10 least expensive regional markets. Number 10 equal is Goulburn, Victoria, 100,000, which means that the median price of a block of land in the Goulburn Valley region of Victoria is $100,000. Who understands that? I'd like you to remember that because we're going to refer back to that shortly. All right? By the way, is that expensive or cheap for a block of land? It's pretty inexpensive, actually. All right? That's why it's equal 10th cheapest in Australia. All right. Now, I want to show you some stuff about land which will really get you thinking, get you excited. This is from the Fin Review, and I'm just drilling into a part of it. According to the Fin Review, there's an area in Victoria called Point Cook, right? It's where I actually live. I live in Point Cook. It's about 25 k's, 22 k's from the city to the west, down a freeway, right? This area, a hectare of land there in 2004, I know it's a bit late to do some numbers, but you'll get pretty excited with the numbers. I'm sure you'll like it. 2004, how much was a hectare there? 345K, right? In 2010, they resold 24 hectares, so a bulk lot. They sold that bulk lot for 1.25 million. So if we're comparing apples with apples and it wasn't a bulk lot, it wouldn't be 1.24, it'd be about 1.4 million. Does that make sense? They got a wholesale discount. So at 1.4 million, you tell me, how much did the land go up in the space of 6 years? Yeah, about 400% in 6 years. So how much is that per annum? Anyone got a calculator? It's about 67%. When was the last time you earned 67% per annum for 6 years? Who'd be happy with that? Now guess what? Gets better. That's what's called a return on asset value. When people buy this land, that's return on asset. What is it? Return on asset. Do people in Australia buy properties with 100% cash, yes or no? They get a loan, don't they? Loans on land is 30% your money, 70% the bank. So in fact, your return on investment, the money you would have put in, you would have only put in a third of the money. What would your return have been if you only put in a third of it? Well, 3 times that. You would have made about 200% return on investment for 10 years solid, for 6 years solid. Who thinks that sounds very, very exciting? Now, let me tell you, some of you have already in the back of your minds made up an excuse. Well, I can't do that. It's not for me because it's a hectare. I could never have afforded a hectare. Let's be honest. Who's already made an excuse? Who's had that little voice talking away in their back of their heads? All right? Great. Thank you for your honesty. So let's go to the next example, Williams Landing. Williams Landing's across the freeway. I used to live there before Point Cook. Lovely spot. But let's talk about a single block of land. Is that within your conscious space? Yes or no? Is that more easily relatable? Yes or no? Could you relate yourself buying a single block of land? Yes or no? Yes. Of course you could, all right? And a block of land in Williams Landing last year, so 2009, was how much? 198. Now, by the way, is that an expensive block of land? Is 198,000 a lot for a block of land? It's not really. Compared to Australia, Victoria's got very cheap land. All right? 198. It says that in 2010, that block went up to, let me tell you, any guesses? That block went to 275. It went up 30, I think it's 34%, it's 38%. Is that return on asset or return on investment? That's return on asset. The people who bought in there, most of them had only put down a 10% deposit and were waiting for titles to issue. Some of them didn't even have a loan. They only put 10% down. What do you think their return on investment was? Yeah, 380%. When was the last time you passively made 380% on something as boring as a block of dirt? Because it's not buying property, it's doing property under the right what? System. Right? Now, these people, when they bought, they probably, because they bought off the plan, did not even have a loan. They did not even have to get a what? A mortgage. They didn't have to pay body corporate. They didn't have to pay rates. They didn't have to pay maintenance. They didn't have to pay land tax. And most importantly, they didn't have to pay the bank. Who thinks that's pretty amazing, doing it that way? And by the way, how complicated is buying a block of dirt and waiting? Who thinks that you have to switch on a computer or read newspapers every day to be able to do that? Just buy a block of dirt and wait. Who thinks they could psychologically handle that level of stress? All right? Could you do that more than once, yes or no? You bet you could, all right? Now, but some of you are saying, yeah, but what's going to happen after a year? Yeah, you've got to get a loan, and you've got to get a 70% loan from a bank. But what if there was a way to keep doing that for year after year after year and not have to get a loan. Who'd be interested in that? All right, I'm going to show you that shortly. Right, a couple more articles. We'll move past those. Record price for Melbourne land. By the way, Oliver Hume is a real estate agent down in Melbourne, and they are one of the largest real estate agents in Victoria who look after land, right? And so they have got tons and tons of data. Now, listen to this. In Point Cook, they started selling blocks of land 10 years ago at $70,000. Now it's $200,000. In fact, it's actually higher than that. But what that means is that the land there has been moving up and up and up. So in some stages, they're up to stage 76. So that means that they started selling a development, and each year there was a couple of stages sold. Next year, a couple of stages. Next year, a couple of stages. What if you had bought in the first stage? What do you think their price would be in the same development by stage 76? Do you think they keep putting the prices up? That's exactly what they do. Who likes the concept of getting your block, letting someone else do all the heavy lifting and drag your price up and up and up and up? Who likes the sound of that? Right? Because this is why land is actually a system. If you understand this, you can make incredible returns that do not exist in the property market. Land is a very unique vehicle because it can be done an incredibly different way. So here's my question to you. How do you take advantage of the current situation that's going on with the lack of properties, the huge demand, and also the major lack of land, but do land in such an incredible way, or properties in an incredible way? I don't mind what you want to do. My only point is do it in an incredible way. Who thinks that would be a smart philosophy to follow? And what I mean by that is, how do you do it smarter, faster, easy, with less money and often less risk than the average person? All right, well, at the moment, there's actually 3 ways that you can get into the property market. Number 1 is trial and error. This is the way I started. I actually came up to Queensland with my partner at the time, and she and I saw our parents work incredibly hard, not have time for their families, and we thought, let's buy some properties. Sydney was too expensive. We came up to Brisbane and the Gold Coast. We actually made a huge mistake. We actually way overpaid on 2 properties. We overpaid by $40,000 because we didn't understand this concept called 2-tier marketing. There was a price for locals, people from Brizzy and the Gold Coast, and those people south of the border. All right? The cockroaches, yeah. All right? So, Mexican, whatever you want to call them, right? So we got slammed. Now, 40K, is that a lot of money to lose? What about 40K 15 years ago? Ouch. All right? So I learnt my lesson, and that was that I needed smarter people on my team. I thought I knew what I was doing. In fact, obviously, I'd made a huge mistake. I needed the right people. I needed the right systems. And I needed better education. I had to lose the ego because the ego was actually costing me. It actually just cost me 40 grand. Who's following? Who understands? All right? So I invested a lot of money in myself to actually learn from all the best people. In fact, some of the same mentors that Jamie used were like, who's heard of Tony Robbins? Yeah. Right? Brian Tracy, Dr. Fred Gross, Dr. John DeMartini, Philippa Bond here, many different people. Chris Howard. I've learned from a whole lot of different people because you pick what works for you from all of those people and you then integrate it and implement it. Number 2, the other way is this. You can get a property advocate, sometimes called a buyer's agent, to work on your behalf. They charge for a typical property worth $500,000. They will charge roughly between 1% to about 3%. So that's about $15,000. So 1%, they usually charge 10K flat plus 1% success fee, right? The others just charge a flat 3%. Who would pay someone 15 grand to buy them a property? Who'd want to do that? Well, what if they could save you 20, 30, 50K? Now who'd want to make a commercial decision? Pay them 15 if they could save you. As long as you could genuinely measure, independently verify they're making you money. Would you pay the 15K? Yes or yes? Of course you would. That would be smart. Good use of your time as long as you could verify and you were absolutely certain of it. The third way is what we do. And basically, Jamie and all of us sat around and said, we're all property investors. We've all bought lots of properties. What would we want in a system that we would pay for, that we would want, that would actually help us? And that's what 21st Century Property Direct is all about. Who here at the moment is already a 21st Century Property Direct member, a PD member? 1 person? Two people? Two persons. All right, two people. All right. Well, welcome to you guys. For the rest of you, let me tell you what we do to look after our members to get them great results. All right. First thing we do is explain to you why we have this. Would you agree that there are people who, when you start off in property, it's scary. The numbers are big and it's very scary. Would it be important to have your hand held through that process? Yes or no? All right. There are some people who bought maybe 2 or 3 properties, and you know what? They realise that they don't have eyes in every market, and they understand that having someone looking at different opportunities for them in every city of Australia, including places like Auckland and including like places overseas, for house and land, townhouses and apartments, could be very valuable. Who understands that? Plus, we've got some people who say, you know what? We've got some clients that have over 100 properties. And they say, listen, just one idea or one strategy from you guys, if we integrate that, implement it across our portfolio, we can already get a tremendous result. So we look after people from every different background because that's what this service was designed to do. All right? We have people on our team who are real estate agents, property developers, finance specialists, interior designers, architects, quantity surveyors, accountants. We have a huge team. Who is on your team at the moment? Who helps you make extraordinarily good decisions that are commercial decisions? Who's on your team right now? And what's that costing you not having the right people on your team in terms of time and money? I'll give you an example. Put your hand up if you've ever bought a property. Put them right up, please. Right up. Look around. Leave your hand up if you are actually able to negotiate for your property purchase to not pay any stamp duty. One person. Well done, sir. Oh, Nikki as well. All right. Yeah, she's access to our PD service. All right. If you weren't able to do that, how come? Because some of our members were able to do that. Some of them got other upgrades or inclusions or extras that the retail public never saw or never got. If you had your stamp duty paid for, how much would that be worth to you? Per property. How much would it be worth to you? 20K? 30K? What would it be worth to you? Make a commercial decision. So this is some of the things that we do for our members. Our membership is broken up into 3 components, 3 pillars that we know give people results. How many? 3. The first that we actually look at is education. We know it starts with education. Do you want to know why? If you're not educated the right way about property, you have what's called fear. And Peter Blaine talked about fear. If you have fear, do you take massive action, yes or no? Most people, no. What overcomes fear is massive education. We educate our clients for between 3 to 7 years. I've just come from running a 2-day event in Sydney, and people loved it. And we had people there who'd been to the event several times already. And you know what they said? Every time we come to an event, we learn some different stuff. We're always around other property investors who are actually on the same road, and some of them actually a bit further ahead of us, and who are getting different results to us, and we love talking to them. But we really love the fact that we learn some new things around property. We learn some new things around tax and finance and structures and the legal system. So they love having those 4 different elements they learn and get updated with all the time. We do things in terms of education, in terms of live events like this. We also do a lot of home studies. Why? Because people are starting off at different levels. We want to get them all to the same level at their own speed in the comfort of their homes. Does that make sense? Right? Then what we also do is you do webinars for people who can't come to all the live events, as well as we do newsletters and a whole bunch of different things like that. Because we know that people have got busy lives and they all learn at different speeds and different ways. So we cater for that. All right? Number 2, we do a property search service. We go out and we find great property deals. We start with a great property, but what we do is we turn it into a great deal. And I'll show you that in a moment. And then number 3, we do wholesale land. And to me, that's the most incredible part of what I'm about to show you. But the first bit is education. So let me just tell you kind of, if you want results, this is our investors pyramid. This is the way you've got to be programming yourself to think and act. It all starts with knowledge. If you don't have knowledge, you'll make a mistake, you'll be scared, you won't do it again. Right? This is why knowledge and getting it up front is the cheapest way of getting to a result. So you pay for your education one way or the other. Smart people realize this. You either accept it and pay for it up front, you can do it faster and easier, or you learn that in the end you made a horrendous mistake that has cost you money and time. Who here has made mistakes in the past? Right? Have they cost you dearly? Yes or no? Of course. And you could have learnt something real quick, real easy, that could have stopped you making that expensive mistake. We understand that knowledge is critical. You get the knowledge right, then that leads you on to creating your own plan. Put your hand up if you currently have a written down, structured wealth plan. Put your hand up if you've got one of those. All right, Lou's got a hand up, 3 or 4 people. Well done to you guys for putting it in writing, because it's going to give you a 10 times greater chance of making it into a reality than people who actually don't have it written down. And that's just some facts. The more you actually have a clear focus and you write it down, the more you'll attract it specifically and it'll come to you. All right? So this is what we help people through our system. Right? For 3 to 5 years, we educate you, we help build a plan, we then look after getting your finance. The finance, who knows exactly how much they can borrow right now? Maximum borrowing capacity right now. If you haven't done it in the last day or so, you don't know, because did they change the interest rates? Yes or no? That will affect your DSR. That will affect your borrowing capacity, right? So you have to understand, and particularly if you're with CBA, who put it up beyond the RBA 0.25%, it's definitely affected your maximum borrowing capacity, all right? So this is what we do for our members all the time. We analyse who's going to give them the most money, the easiest, fastest way, so they can make informed decisions as to what deal is the most appropriate for them. Then we talk to them about asset and tax, or one of our team does. We help structure them the right way to minimise their risk, to maximise their borrowing capacity. Then it's about due diligence. Not just about the property, but the area and then the specific property. Because don't you want the best area for capital growth coupled with the best property that will give you the best growth? Yes or no? And then on top of that, and this is where most people don't know or don't understand this, a great property is good, but a great property structured poorly will only give you an okay result. An average property structured incredibly well will give you an unbelievable result that will far surpass a good property structured poorly. This is what people do not understand. In fact, I want to just quickly, I've got a few moments, I want to show you something that clearly illustrates this. Are you okay with this? You want to see how you can make not just 10 or 20%, but 100 or 1,000% return in properties? Who wants to see how to do that? It's about structuring. So let me show you some of the things that we do with people and show them. All right? And it's understanding this return on asset, return on investment paradigm correctly. If you have an average property that's, let's say, $500,000, growing at 10% per annum for 12 months in a normal market, you bought it for $500, it's now worth how much? $550K, correct? You've made $50K. Come on, is that correct? Yes or no? All right. Now, the average people, average buyers are taught that they actually need to own property. And they're taught to do it one of 2 ways. The first way is pay 100% cash. If I paid 100% cash, and let me tell you, in some parts of the world, you have to. If you are buying in the US, for most people who don't have our system, you are buying 100% cash. Some of the US people who live there can't even get a loan because their FICO score has been hammered. FICO is their credit score equivalent, okay? So they can't even get a loan. So some parts of the US, some parts in Eastern Europe, some parts in Africa, and some parts in Asia, the only way you buy properties is with 100% cash. Who understands that? Come on, who understands? 100% cash, right? So if I paid 500K cash for this property and it goes to 550, I make 50K. My return on asset is 10%. Who follows that? What is my return on investment? I put in 100% cash. I made 50K. How much is my return on investment? It's 10% as well. I put in 500K, which is 100% cash. I make 50K. My return on investment is 10K. Show me you understand. All right? But what if I did this? What if I went to an Australian bank and said, give me 80% P&I, and I put in 20% cash? I've now put in 1/5 of the money. Who's following so far? But have I made exactly the same amount of growth? Yes or no? Come on, yes or no? So I put in 20%, which is $100,000. The bank lends me $400,000. We're all following, yes? So I put in 100K of my money and I make 50K. What's my return on investment now? 50%. Who thinks 50% is a whole lot better than 10%? Right? But hey, I'm only getting started. Repeat after me. There's always another level. Repeat after me. Would you like to see it? Yes. All right. Average people, average buyers are taught to own. Smart, successful investors are not taught to own. They're taught to control. Sorry? Oh. Can we flip to flip charts? Oh, thank you. Thank you. All right. And you may want to write this down because average people throughout history have been taught to own. Smart, successful investors have all been taught you don't need to own anything. You just need to control it. Repeat after me. Control. That's what you need to do. Watch this. Control versus ownership is a huge paradigm shift. I'll give you a simple example that many of you are familiar with. Put your hand up if you have an interest-only loan. Put them up. All right? Would you agree with those people with your hands up that for the same loan amount, your per month repayment is actually lower than a P&I loan? Is that true? You say yes or no? All right. So in fact, you're telling me that you're getting exactly the same growth, yes or no, with less cash flow, yes or no? So who thinks getting the same result with less money is a smarter way of doing things? Right? But that's a starting point. So that's 80% interest only plus your 20% cash. What's the next level? Who here has ever done an off-the-plan purchase? Anyone ever done off the plan? Your name, sir? Dave. Dave, while you were buying it off the plan, did you have to pay rates? No. Did you have to pay land tax? No. Did you have to pay maintenance? No. Did you have to pay body corporate? Did you have to pay any money to the bank as a loan repayment? No. So Dave, listen to this, Dave got the same growth as maybe someone across the road who actually had a mortgage, but he had no money coming out of his pocket. Who thinks Dave's a rock star? I do. All right? So he did off-plan. And in fact, Dave, normally when you do off-plan, how much is the deposit you normally put down? Oh, okay, well, that's even more advanced. So you are a rock star, aren't you? You put down $1,000. Normally you put down 10%. So if you put down 10% of this value, right? How much is 10% of this? How much? 50. You put down 50 and you made how much? 50. What's my return on investment now? It's 100% return on investment. Who's following so far? Right? Is there another level? Well, in life there's what? There's always what? Another level. Who wants to see the next level up? Go on. The next level up. You could do, there's actually a sub-level within this because you could do something with off the plan. And imagine this. Imagine you could rent your deposit. Instead of coming up with 10%, which is 50K, what if instead of coming up with 50K, you only come up with $5,000? Who thinks coming up with $5,000 is easier than coming up with 50 grand? Anyone? All right. If you came up with just $5,000, you could have gotten not 100% return, but with $5,000, by renting your deposit, you could have gotten 1,000% return on investment. Who understands that? But is there another level? Yeah, there's another way to rent your deposit, right? Because there's different financial instruments, and you could have, not for $5,000, but probably, has anyone got a calculator? Times $50,000 by 1.6%. $800. That's $800, isn't it? Geez, my maths is good. $800. Oh, I can't work this out, but $800 to make 50 grand. Let's just say it was $1,000. $1,000 to make 50 grand is 5,000% return on investment. Is that right? So, has everybody noticed that the transaction, the asset, has not changed? Has anyone noticed that? What has changed is the structure. All that you've done is you've increased the level of skill and structure to get you an incredibly much better result. In fact, if I would have actually used as little as a few $1,000s, but I had 500K, could I have done a few more deals, yes or no? Right? You see, this is why I said most people just focus on the property, but they do it this way. I could take an average property and I could get orders of magnitude better results with it, even if it was an average property, by structuring it the right way. Repeat after me. Structure is superior to property. It's absolutely superior. Have I just demonstrated to you just quickly what is possible? I've just given you an overview. I could spend a whole day explaining all the different ways to structure it, but I wanted to give you a taste. And some of you go, well, how do I rent my deposit? When you come to our 2-day event, you'll all get a yellow form later on. You're all welcome. I'm all going to give you a ticket to our 2-day course. You can say thanks for that. Yeah? All right, you're all going to make sure you pick one of the forms up on the way out. It says 2-day advanced finance property course. Who's been to our advanced 2-day finance and property mastery course? Anyone? Yeah? Did you enjoy it? Conrad probably took that one. Did you enjoy it? Oh, we were both there. Okay, all right. And it's great because we've both got different experiences, different knowledge bases, but we also have a lot of different speakers there, and it's a way for you to actually learn a lot. Tickets to that are worth about $1,000 each. You're going to all get them for free. So it looks like this. You'll pick it up on the way out, hand it in tonight, just cross out where the credit card is and put in, Stephen said it's free. That'll do. They'll know what it means. All right. Now, back to the slideshow. So we understand that when you actually do your due diligence and then you structure right, and part of that structure is evident in the negotiation level, then you go to transaction, you can get extraordinarily better results. This is what we help our members do as a plan, as a system for 3, 5, and 7 years. It's a plan, it's a system to get them from where they are to where they want to go to, using property as the vehicle. And I'm not telling you which is the right property. We've got properties all over Australia and New Zealand internationally. I'm not going to say to you which location or what type. It could be blocks of land. It could be US properties. I don't know. But this is what we sit down, work out where the heck you are. Because is it important to know where you're starting from? Because otherwise, how do you know you're going backwards or forwards, really? Do some people spend a lot of energy in life treading water, being busy, but not actually knowing that they're actually going backwards or forwards? Is that a fair statement, yes or no? Right? Many people would like to think they're moving forward, but in some cases they're not. All right? So, we give you a whole lot of home studies. The home studies, I'll just quickly run through some of them. The first one is the Fast Track Home Study, Cash Flow Positive Property. This is all about renovation. Who likes renovation? Who likes renos? It's a great way to make money, particularly if you're creative or you've got some of the skills. Fantastic. You know, you've got to be organised. You've got to have the right skill set. If you don't, you shouldn't do this. The only thing I would suggest is you find someone doing a reno and volunteer your time and watch what happens and then decide whether it's for you or not. I've seen too many people lose out by getting stuck halfway, running out of money, then having to sell the property half finished. And let me tell you, you'll make a loss, a big loss. All right? What this does is it goes through all the steps required, but in fact, even if you're not doing a reno, the information on this is brilliant. It's from a gentleman called Warren Bourget, and he actually is retired, living in Europe now, and he's a multimillionaire from doing property renos, all right? So that information is brilliant, and he did it mostly around the St Kilda area in Melbourne. Who's heard of St Kilda? It's a great area, just did reno after reno after reno. Built a system around doing renos and building wealth. The second one we give you is from a gentleman called Warren Black. Now, who's heard Warren Black speak? Warren is a CPA, Warren is also a solicitor, and Warren worked for 10 years for the Australian Tax Office in the audit department. So do you think he knows his stuff? You bet, right? And he teaches you why you should own nothing and control everything. It's a paradigm shift. We are not taught that way. We're sold a story by the governments, by schools, by well-meaning friends and family, but it's not the best way. It's one way, but it's not the best way. Does that make sense? That's the difference. It's one way, not the best way, right? He teaches you about different structures, including how to buy properties in self-managed super funds, all of these sorts of things. That course by itself is worth about $500. The other one was worth $2,000, right? We also give you this one. This is the home study of the 2-day event. It's brilliant, but the information keeps changing. This was shot earlier this year in Brisbane. You watch it a couple of times, you get up to speed, and then you come to our live events. And we have people coming to ones interstate as well. Why? Because if they're looking to buy for properties interstate, They often find it really useful to rub shoulders with other investors who are already on that path, investing in that city or that state. Who thinks that would be valuable? Be able to have lunch or coffee or just chat to people and network with them and say, show me around what you do. Give me the lay of the land, all right? Because they would love to return the favour or expect the return of the favour when they come up here as well. So we literally have people who just fly in from sometimes other countries as well. The one I just ran in Sydney, we had a couple of guys there from Perth. We had some guys who drove up from Temora. We had people from Canberra, all over the place. All right, it was great, and they enjoyed it. When I've run other ones in Perth, we had Darwin people fly in as well, which I thought was a bit far, but they could have gone to Brisbane, but just the dates worked better for them. All right, so that's the education side. Live events, home studies, webinars, books, newsletters. For 3 to 7 years, depending on how much help you want, being around those sorts of people. The second thing we do, and this is the thing that I think is probably one of the best services we provide, is access to properties. We're not pushing one particular development, so we're not a developer. What we do is we work with developers all over Australia, New Zealand, in house and land, townhouses and apartments. So what we do is our philosophy is we will educate you, we will show you where we get all of our data, we'll show you what our findings are in terms of what areas are growing the best and why, and you can decide where in Australia or overseas you want to invest. All right? And we'll deal with many different developers in those areas. You can pick which developer and or which development. So we're not biased, we're not saying this or this one, you get to pick. We know some people want to spread out their investments all over Australia to minimise land tax. We know some people want to buy properties in other areas because they want to go live there. We know some people want to actually have properties in other areas just so they can travel there and get the tax office to pay for the trip. I'm not saying that's the reason you should ever invest, but some people, that's the way they think. We're not here to tell you how to think in that way. You decide. We want to give you a smorgasbord. You decide what you want to eat. Does that make sense? Okay? So let me show you a little bit about that. So the first thing we do is we make sure our members get first access to properties in this system. They get ground floor access, all right? Normally when a developer builds something, the developer keeps the best ones and their family buys the next best ones. The financier buys the next and their friends and family buy the next. So even if you were the front of the queue when they release it, some of the best ones are gone. Or they're back on the market but at a higher price. They're actually being flipped and resold. Who's actually seen that happen? All right? So we have a very simple deal. We say to the developer, you have to provide genuine, independently verifiable and measurable value to our members. And our members get first pick, not you. Right? And our developers like working with us because what it does is they know that our members are highly educated. They know how to critique a development, they know how to measure things. And if it stacks up, they can make a decision and they stick with it. Do you think developers want people like that, yes or no? Of course they do, because a developer has a certain time frame they have to sell a certain number in. It's called pre-sales. And if they don't sell it in a certain time frame, the quote they got to build the building lapses. And guess, what do you think quotes go, up or down? Up, very fast. So if it takes them too long, literally overnight, their profitability can be halved. And that's why they don't want to do that. That's why they need to work fast and they need to work with people that are smart who understand property. This is why we spend so much time educating our members so they actually are clear on what they want. We don't want to tell them what they need. We want to educate them so they are clear in what they want. And we will find different projects that meet those needs. Right? Now, some of the other things we do is we have a very detailed 52 points of criteria. When you come to our 2-day course, guess what we're going to teach you? We're going to teach you our 52 points of criteria. And whenever you look at any of our properties, we will give you a research document that covers our 52 points of criteria for every single property that we do. Who thinks that would be incredibly valuable? Right? Because that's the only way you can make an informed decision. It's not about shoving a glossy brochure in your face like most agents do and say, you better buy it, they're really good. It's about showing you, here are the demographics, here's the distance to the schools, this is how many parks are in the area, this is what the LGA has grown at, this is what this area grows at, this is the demographics, this is what it values up at, this is what we can get loans at, this is an independent letter saying what it should rent at. Do you think that would be valuable, yes or no? Right? But most people aren't even educated to understand to look for those things. Right? But we have high standards. Why? Because I'm a member, Jamie's a member, our whole team are members. this membership is not just for you. We are members. We set it up because we wanted a better system to acquire properties at better prices and better deals. Imagine this. Imagine Jamie walks into a room. Do you think Jamie could negotiate and receive a better property deal than you? Yes or no? Yes. Who would love to stand behind him and say, I'll have one of those too, thanks? Because that's what this membership is all about. All right? And the more people we have in this membership, literally the more leverage we have. The more people, guess what? The bigger deals we can take out, the better deals we get for all of us. That's what this membership's about, full stop. And in fact, part of this, there's a whole lot of things that we look for, all right? Part of this, we even negotiate something very specific for our members. We negotiate that our members get, listen to this, 5 working days cooling off. Because how long do great opportunities last for in the market? How long? 2 seconds, right? But we have this fear of if we leap in, we could make a mistake. So what happens is we're kind of like a deer in headlights. We don't know what to do. We don't want to miss out on a great deal, but we don't want to jump in case we make a mistake. Who honestly understands that, right? So how do we resolve that? Well, first of all, we educate people massively up front. Then we make sure they get a whole due diligence document. Then we give them plenty of time. Most jurisdictions in Australia give you 3 working days cooling off. We get you 5, which is actually a week. You understand that? That is double to nearly triple what you would get anywhere else. No agent in their right mind would want to give you longer term and educate you and give you all the documentation. You understand why, right? But we do the opposite. Why? Real simple. Because we want you to double check and triple check and quadruple check. It's the right deal for you at the right time. Why? Because you're going to come back again and again. And you're going to tell all your friends and family, and our membership size will get bigger, and we'll be able to do bigger deals. Who gets that? It's the whole philosophy behind this. We all can win together. It's not a big deal. We can all win together by using this system. Let me show you one of the house deals that we've got. This is in Point Cook. Actually, sorry, the ones I'm going to show you, these are all gone, but I want to show you the sorts of things that we do. Point Cook is it's actually 20 k's as the bird flies. It's about 25 k's driving, right? Takes you about 20 minutes to get into the city. The city you can see in the distance. In the foreground is a big thing, which is a marina. And in the middle is roughly where Point Cook is. Now, let me ask you this. Sanctuary Lakes is a Greg Norman designed golf course. Do you think property prices there are high? Sure are. This marina is at Wyndham Harbour. It will be the largest marina in the Southern Hemisphere. 1,000 boats, 30 super yachts, and a whole lot of restaurants, bars, cafes, etc. Point Cook is in the middle of them. Do you think that this $500 million marina will generate a whole lifestyle area precinct around it? Yes or no? Of course it will, right? And do you think Sanctuary Lakes, let me tell you, some of the blocks of land there on their own island, there's $1 million just for the block of land. What do you think that will do to Point Cook? Go up a lot, all right? So, Point Cook is a very nice area, but you know what? We're not just dealing with one developer there. These are all the different land estates there. We can put you in touch with any one of them. They're all slightly different. I don't care. You decide which one suits your needs, because we've already got better deals than retail for our members in each of these estates. We don't care which one you want to deal with, all right? For instance, I live in Alamanda. It's not listed there. Alamanda won the Victorian Award for the best integrated resort lifestyle development. It then took it out for Australia. The reason I live there is a really simple reason. It's a bit geeky, but I wanted fibre optic to my front door. Because I run webinars, I need high-speed, reliable data into Asia and the US, because I run a lot of webinars. Does that make sense? That was my need, all right? There is also a space for a huge school there. They have an outdoor park with, you know, all the exercises you do around the park. They also have a gym, sauna, spa, swimming pool, and a cafe. I usually make it to the cafe, not to the gym. All right? But it's all integrated in the same lifestyle development. It's a really nice area. And they built a mountain, literally with a pirate ship on top, with long slides for kids. So the little kids spend all day, their parents at the barbecue, you know, talking to their friends, having a picnic. The kids literally bolt up and down this mountain and then slide down, and they do this all day. So by the time they go home, the kids are exhausted and the parents are super happy. So this is one of the reasons why it won these awards, because they thought about all these things, okay? So What about townhouses? Well, some people prefer townhouses. We've got one in a place called Newport Keys. It's in Adelaide. If you understand what's going to happen to Adelaide, has already happened in Perth. When all the mining money flew into Perth, property prices there jumped by 40%, right? Someone decided, you know what, we're going to jump the gun here and create the sort of lifestyle development, low maintenance areas that people who work in the mining industry will want to live in. Now, BHP will open up the biggest mine in the world in a place called Olympic Dam. Olympic Dam is so big that it will have a lifespan of approximately 100 years conservatively. It has the richest, most easily accessible reserves of uranium they found anywhere in the world. But not just that, but gold, palladium, nickel, copper, all of these other things as well. And it's about 4 or 5 hours drive north of Adelaide. What do you think that is likely to do to Adelaide's wealth? Take a wild guess. It will skyrocket and underwrite it, not just for the next decade, but literally for decades to come. So, do you think all these BHP execs want their families to live on the mine site when they could drive, 3, 4 or 5 hours? And by the way, they'll upgrade the roads. That's no issue, right? But unlike Karratha, Dampier, that you have to fly in, fly out, they'll be able to drive here. So they'll want somewhere good to live. Who understands so far? And they'll be on really good money and the company will be paying, so they don't care, right? So this is what they're building in Adelaide, this development. That's what it currently looks like. These are nice, large, 3-bedroom townhouses, high spec, low maintenance, well equipped. You'd love to live there, right? Yes or no? Well, they've been selling these for about $680,000, $620,000, $680,000, around that range. The developer here has got a long-term plan. They want to get on to the next stage. Now, they've got a couple left in the last stage, but they want to start selling the new stage. At guess what price? Higher. So they actually said, well, we can't advertise a lower price to get rid of the last couple. So what we'll do is we'll do what's called an off-market transaction. Repeat after me. Off-market transaction. What is it? Off-market transaction. When you can find these, this is where you'll clean up. Because in an off-market transaction, they've already made their profit target for the stage or that part of the development. They just need to actually sell a couple so they don't have to worry about marketing or sales. They can just focus on the next stage. Does that make sense? So these were selling for up to $680K. For our members, because we're not allowed to advertise this price. We're not allowed to go in the papers and advertise this. So for our members, I think there's maybe one left, I don't know, but this is what our members got. $150K below what other people had been paying for the last couple of months. When was the last time you made $150K on the way in by signing a contract? $150K. How long would it take you to save up that much? These are the sorts of things we bring to our members all the time, right? What would you pay me to get you a deal that made you $150K on the way in? What would you pay me? 1%. Is that all I'm worth to you? Is that very commercial? If someone could make you $150K, what would you pay them? Seriously, what would you pay them? 20%? Maybe I'd do it for you, maybe. We've got some others. This one's at Kalanga. We've got other, we do them all over Australia. So this is a Queensland one. Each one of these in this development was uniquely designed. None of them had the same floor plan. Do people like things that look kind of similar but not the same? Yeah, of course they do. All right. What about apartments? Who's heard of a suburb called Coorparoo? Anyone heard of Coorparoo? Is it a good suburb? Yeah, it's very close to the city. These sold to our members very, very quickly. We did a whole due diligence background on them at Coorparoo. They were apartments. You can see how close Coorparoo is to the city. We got all the stats from RP Data, so independent data sources. We got together all the information they needed into a nice folder. They could then research that and understand it. They're all gone. None of them are available. I just want to give you ideas of the type of stock we're finding for our members, right? But what I want to show you is this. For every single one of our properties, we put together as part of the due diligence an independent a market appraisal of rental from a local agent. Do you think that would be important to know? Secondly, we put together an independent valuation by a top-tier valuer that's on every bank panel, like a CB Richard Ellis. or a Heron Todd White or a Charter Keck Kramer. So no dodgy backroom vals, but valuations done by top-tier valuers on every bank panel that you can then use for lending purposes. Who thinks that would be pretty valuable, right? Because that is an independent source of what it's probably worth. And then a quantity surveyor's report for depreciation. So we put all of this in every one of our due diligence kits. Like that alone will save you like $1,000. Do you understand that? And every one of our members gets this. This is the value we provide to our members because this is what we would expect if we were buying it ourselves. All right? Here's another example of an apartment. Now, this is unique because we didn't put together a due diligence kit for this, right? Because we were already working with the developer and the developer went bust. So all the people who put money in got all their money back, but then the bank just said, because they hadn't gone to contract, they didn't have to sell it at auction, they said, we'll do it as an off-market transaction. We said, our members will take all of them, right? And it's at Aspendale, it's right near Mordialloc, it's right on the beach. This is the view. Is that a nice view, yes or no? Right? Now, this is what it looked like inside, very high spec. Let me just give you a perspective. Normally, and as a banker, I know this, most people pay retail. Right? When you pay retail, who's heard that there's a thing called a bank valuation? Who understands that? Does a bank valuation come in above retail, at retail, or below retail? All of you said below. You're actually right. It comes in below. So that your bank valuation is below. Well, how much below retail? So 99% of all Australians, when they buy property, it is at retail. If you've bought a bank val, you're in the 1%, you've done really well. How much below retail is bank val normally? 15? Any other numbers? 10? 20? It's usually anywhere from 3 to 20%. It's most commonly between about 5 to 10%. So if you've bought within 5 to 10% of a bank val, most people consider you've done reasonably well, given that most people understand bank vals are conservative. If you asked Heron Todd White for a market val, it would be higher than a bank val. Do you all understand the difference? Okay? So if you bought between 5 or 10%, but above a bank val at retail, most people would consider you've done pretty well okay. But if you got to buy a bank val, you're in the 1%. You've done really well. Who understands? But what if you bought below bank val? You're literally in the 0.1% of the population. This is why we didn't have a chance to do a bank val, why we didn't do a whole due diligence kit on this. This was high spec, and I mean really high spec. This was built with owner-occupiers in mind. Beautiful dark wood, not laminate veneer floorboards, but solid floorboards with invisible nails, right? So there was no nail holes, nothing, right? And that takes a lot of work doing it that way. Beautiful design, beautiful layout, super high spec. Look at the prices. The bank vals were those prices in the blue. Look at what our members purchased them at. And let me tell you, we put it out, they just went, even though we had no due diligence folder. Do you understand why? Because these people in Melbourne knew the area, they knew the prices, and they knew that this was a really good price. When you can buy 40 to 50K below bank val in an area that you know, that's on the water, that can never be replaced, are you going to be pretty happy, yes or no? Right? We had some clients just the other day, they just bought in Mount Waverley. Listen to this, $100,000 below bank val. Not just below retail, below bank val. Would you be happy with us doing that work for you, yes or no? All right? Because that literally means at the stroke of a pen, you've bought it wholesale. You have bought it wholesale. You've just banked that. It's now yours. Who understands? All right? There's a third part of what we do. Who thinks the first part's pretty good? Who thinks the second part's outstanding? Third part will knock your socks off. You ready? Come on, are you ready? Yes. All right. Third part. I covered some of this earlier. Just to remind you, what if you could buy properties with saving 100K throughout in holding costs? What if you could buy in a high growth area with no progress payments, 10 to 12 years? What if you could buy at over 50% below cost? What if you did it through an option that allowed you to have full control and on-sell? What if you could make 60 to 100% return per annum consistently? What if you could make 20K fast cash on the way in or 250K long term? Would that be an amazing structure, an amazing asset, yes or no? All right? Well, this is where it is. Moira Park Green City. It's exclusively for our Property Direct members and their guests. It's located in a place called Shepparton, Victoria. Now, Shepparton, many of you don't know the story behind Shepparton, but just like a lot of the regional cities in Queensland, it has a very, very strong track record. I'm going to show you a bit about that in a moment, but up the top you can see Shepparton. To its left you can see Mooroopna, which is its sister city. It's separated by a river and a little bit of a state forest. Down below it you can see Kialla West. Down below it's Kialla West. It's on the way to Melbourne. All right? The yellow part here is stage 1. The red part is stage 2. Stage 1 is between 1 to 15 years. Stage 2 is 10 to 25 years. So, do you think this is a long-term plan, yes or no? If you got in early, what do you think they're going to be doing for the next 25 years with price growth in these stage 1 and stage 2s? What do you think? Might go up? Yeah, they're going to be consistently putting this up for the next 25 years. Who thinks that sounds like a good plan for someone to do all the heavy lifting as long as you can get in early? Who thinks that sounds pretty good so far? But what if you get in early and not have to have a loan? No loan, nobody corporate, no rates, no land tax, no maintenance. And you could experience most of that heavy lifting. Well, how would we do that? Well, the first part is this yellow part here, looks like this in detail. These drawings were done by a company called SMEC. They're the developer. Who's heard of SMEC Urban? Anyone? All right. Most of you haven't. Let me tell you what SMEC stands for. Snowy Mountains Engineering Corporation. Guess what they built in the late 50s? The Snowy Mountains Hydroelectric Authority. They built the dam and the turbines, the whole thing. Right, so have they been around a long time? Have they got the street credibility, yes or no? They built some of the biggest projects in Australia and overseas. The government used to consult them out for fees to other governments and corporates to do work. They have a division called SMEC Urban. Guess what the urban department does? Urban planning. Guess who they work for? A list of who's who. Divine, Multiplex, Delphin. The list goes on and on and on. They don't just work for corporations. They also work for government authorities, state governments, federal governments, and also councils in terms of urban planning and project management. They also work for semi-government authorities such as water boards and places like that as well. So do you think they're pretty good at what they do? Yes or no? All right? So they're the developer, right? They have a reputation and they've won lots and lots of awards for the things that they do. All right? So this area is one of the fastest growing areas in Australia. Just the first stage will accommodate well over 3,000 people, right? They will have major retail precincts, small office, home office, resort-style accommodations, all of these sorts of things there. It's located in the Goulburn Valley. And listen to this, the Goulburn Valley, just so that you understand this, is located north of Melbourne, right? In the Goulburn Valley is the Greater Shepparton Local Government Area Authority. And within that is the city of Shepparton, Mooroopna, Kialla West, etc. Just so that you understand the hierarchy there, all right? Now, this area, this city is the number 4 city in Victoria. So it goes Melbourne, then Geelong, then Ballarat, then Bendigo, then Ballarat, then Shep. So it's the 4th biggest regional city after Melbourne. Does that make sense? All right? Now, what's important, that it has a greater retail spend there than not just its biggest city, Ballarat or Bendigo, but both of them combined. Now, do you think that's an important aspect for a regional economy to have a lot of money flowing around the economic wheels, yes or no? All right? In fact, I don't have time to show. I've got a video from one of the local council members, and he said that anyone who wants a job in Shep has always had a job. They don't understand the word recession in Shep, and you'll see why, because it's considered the fruit bowl of Australia, right? Has anyone ever heard SPC Ardmona or IXL? Guess where all that stuff comes from? Shepparton. Shepparton, all right? In fact, it's one of the wealthiest regions in Australia, and it has more BMs and Mercedes per head than anywhere else in Australia. It's 180 kilometres north of Melbourne, so it's 1.5 to 2 hours drive, depending how fast you drive in the traffic. 150,000 people live in the region. It's got a population of 60,000. It's going to expand to over 81,000 by 2030. Now, that's according to council's own documents. Shep's the 4th largest Victorian regional city. All right, it has a $4 billion per annum turnover industry. 45% of all the stone fruit in Australia comes from this area. 16% of all the apples, 90% actually of all the pears, it says 85, it's 90%. 90% of all the kiwi fruit, 90% of all the tomato processing, 90% of all deciduous canned fruit processing, right? $1.2 billion per annum dairy industry, which accounts for 25% of all of Australia's dairy. Bet you didn't know that. 25% of all dairy in Australia comes out of this Goulburn Valley. That's incredible, isn't it? Right? They have one of the largest trucking and transport hubs in Australia. So it has actually got a very diverse economic base. You've got all the agriculture, you've got the machinery and the milling to actually create the canning and all of these works, and then you've got all the transport to get that and all the milk out of here. Does that make sense? So it's got a very strong, diverse economic base. It's actually one of the largest regional concentration of food processing industries and workforce in all of Australia. It has had, listen to this, even through the GFC, it has had 19 consecutive quarters of positive economic growth. It's not just one of the strongest in Victoria, it's one of the strongest in Australia. Who thinks that that's an important part of the story of finding a good area that's going to build wealth for you in property? Anyone believe that? Having a strong economy? I believe so. All right. Prices in the area for the last decade have grown by 11%. Melbourne's actually grown slower than that. 11% per annum is what it's been growing. It's house prices there, median blocks of land about $100,000. They expect over the next 25 years, according to council's current documentation, that they'll need about 9,100 houses. That's about 400 houses a year. The councillor came and spoke when we launched this, and he said, yeah, those numbers are a bit old. We're growing much faster than we expected. We don't need 400 houses a year, we need 900 houses a year as a minimum. Does that bode well for the economic story of this place, yes or no? It's incredibly well. All right, there's a whole lot of housing trends that they need, but look at this. Melbourne is growing, it's the fastest growing city in Australia. It's growing at 1.2%. Shepparton currently is growing at 2.4%. The council is doing a whole lot of projects to amplify the growth. Anyone who wants a job there has a job. They expect their population growth will go to 3.1%. That's one of the fastest growing areas literally in all of Australia. Do people, when they move somewhere, spend money? Yes or no? Is that good for a local economy? Yes or no? All right? Now, it's also, they have a preferred southern growth corridor, and this is in that area. There's only one real growth corridor, and it's south. All right? And that's where the Kialla West, the new shopping centre, commercial offices, all of that is, and that's the one that goes to Melbourne. This is also a very highly favoured tree change location because people aren't doing as much sea change anymore. Why? Because of inundation and global rising of water levels. All right? Let me tell you what's unique about this. It's meant for cradle to grave type existence. So they have diversity of houses. The council realises they need diversity of housing in this area. This project will deliver it. That's why council drove down and presented at our event. They insisted on it. Councils don't normally do that, right? So when we had our first launch to our members who'd been members and waited for 6 to 9 months for this project, right? We had 100 of them show up. We had the council and the developer answered all their questions. We sold more that week to locals than any other place around Australia. What does that tell you? If local Victorians, many of who know this area, they live in there, they drive through there, and they know Victorian law. Victoria has some of the strongest laws around property because they have what's called a vendor statement that's often thicker than the contract, right? If Victorians bought more than anyone else, what does that tell you? Like, really, what does it tell you? All right? Now, Moira Park Living, it's a series of master planned linked communities. It has neighbourhood parks, sporting areas. It's got a green city credentials. This is one of the main reasons why the council is supporting it, because of its green credentials. What that means is the federal government and state governments are giving grants to local regional governments if they have sustainable projects on the go, because sustainable's all the buzz, correct? So this is why they want to get all this extra funding, because they need a big project to show that they're going down the right path. Plus they need this big project. Why? Because they need houses for all these people to keep fueling their economy, right? Which is more ratepayers and a bigger economy. Now, this is what's incredible. In this development, normally when you buy a block of land anywhere, and now that I've said the word Shepparton, you could get online, you could go out to Shep yourself and buy a block of land anywhere in Shep, right? But you will find that blocks of land in Shep, depending on where they're at, some are in the north, where all the housing commission is. You don't want to be in the north, right? Some are actually way to the east, and that's too far away, right? That's Kyalla and further on. You don't want to be there either, right? Kyalla West is where actually there's a lot of expansion going on. They're moving where the planes land, the aircraft field, they're moving it to the other side. They're going to redevelop that as well. The council have already predetermined that this is the preferred southern growth corridor. This is where they want all residential and all the amenities to go. So the council's actually determined this already. So this fulfills a lot of their requirements. So if you bought in that area, you would buy a block of land right now, 90 to 125K right now. You get online, you can check it yourself. But if you bought it online right now, when would you settle that block? 60, 90 days? Then you'd have to get a what? A mortgage. You'd have to pay a mortgage for how long? To capture the growth for the next 10 or 12 years? You'd have to pay mortgage every month. You'd have to pay rates. You'd have to pay land tax. You'd have to pay maintenance. Who understands? That would add up to, so if you wanted this block of land and you bought the land, if I can just go to flip charts, please. If you bought this block of land and this block of land cost you $100,000, after 10 to 12 years, it will probably go to $300,000, because listen to this closely. Houses double in 7 to 10 years. Land triples in 7 to 10 years. Have I shown you some numbers that back that up? Yes or no? All right? So if this doubles, what's your net amount you've made? 200K, agreed? But if you've had $100,000 of holding costs, is that going to hurt your profit? Yes or no? All right? So who likes to make double the amount of profit? Anyone? Right? Well, can I go back to my PowerPoint, please? All right? If you did it the normal way, cross your arms the normal way, if you did it that way, you would have bought the land, got a loan, paid rates, mortgage, you would have lost over $100,000. You do it our way, you don't have to do any of that. The extra 100 grand stays in your pocket. Happy about that? Sounds pretty good? No one has done this. This is the most incredible way of doing land that you'll ever see. And we won't be able to do this again, because do you know how rare it is to be able to negotiate with someone doing such a big development that hasn't been taken over by a multiplex or a Delphin or someone? These are the farmers. They don't care. They'll keep farming for the next 5, 10, 20 years until they're ready to give up those blocks. They don't care. They were going to do it anyway. Who understands that? Right? They would rather get a bigger payoff, because time, they're happy to wait. So we've done an incredible deal, a deal that we'll probably never be able to repeat, simply because at the moment they are what's called asset-rich, cash flow poor. Bless you. You need huge amounts of money as a contribution to give to council to get an area rezoned. Council wants this. They've already decided this is the area will be rezoned. In fact, on either side of it are current developments that have already been built of exactly the same type, and even Kyalla West is also the same. So there's no question. The only thing is you have to pay money to get it rezoned. Why? Because councils have a legal obligation that when they rezone something, they have to have money set aside for amenities, such as libraries, childcare centres, to fix roads, to provide sporting fields. Who understands? So as much as they want it and they need it, they can't rubber stamp it until they get the money transferred to them. So this is why that we've done a deal with them to say that we will be able to help them. Now, if you bought one block of land, would you get a discount? No. But if you bought 10, would you get a discount? Yes. What about 100? You get a really good discount. What we did was we didn't buy 100. We actually underwrote taking out 1,800. Jamie underwrote 1,800. Now, that means that they have certainty as they will get a certain amount of money in a certain period of time. Why is that important? Because they have to pay SMEC a lot of money. They have to pay council a lot of money. And what has been happening is they've tried to sell one or two here, but the problem is the costs have escalated so fast that they couldn't sell any fast enough to catch up. Who understands? So that gave us a huge opportunity to put massive leverage on them to say, we want this, we want this, we want this, we want this. We negotiated stuff you could never do, ever. Do you think you could ever negotiate 10 to 12 years settlement? Who here has ever seen a 10 to 12-year settlement? Think about this. You get to capture the property for at least one, maybe even two property cycles. That's impossible. That doesn't ever happen. But we've done some other things, some really crazy stuff as part of this. We've even put into the contract things such as even if the titles get issued early, right? Because the developer said to us, oh, it should be at least 10 years, we think 12 years, right? We spoke to SMEC and we actually said to them specifically, what if everything goes exactly to plan? Well, then it'll be a minimum 7 to 8 years. So we turned around and said, for our members in the contracts, even if titles have issued, you cannot ask our members to settle any earlier than 10 years. It's in the contract for our members. Retail people won't get that. Our members will. Who thinks that's pretty valuable? Because that means literally some retail people will have bought and they'll have a covenant that says you've got to build within 12 months, right? So by the time you settle, there could actually be blocks have sold at retail price, not at wholesale, and they built houses on them. What will that do to the value of your block, do you think? Put it up a lot. Who can see that's a way to really manufacture growth, right? You could never do this by yourself, right? Now, what if you wanted to sell them? Well, in 7 to 8 years, they will actually have a retail plan, right? They'll do all the marketing, they'll do all the things. You can just say to that retail agent to say, hey, I've got a few blocks, sell mine at the same time. They'll say no problem, all right? And you can just sell and make your profit, right? I don't have time to, there's even ways I can sit down with you, explain to even get a free block. Now that's some crazy stuff that we can actually show you because it's all about the structure of the deal, all right? But this is what a really good thing that we've done. For our members, we've even negotiated this. Normally, when you buy a block of land in any development in Australia, there is a covenant that says you must build within 12 to 18 months. Who knows about that, right? It's in there. They do not want empty, pocketed developments. Developers will always put this in. And in some cases, they're really nasty. There's one at Caroline Springs in Melbourne. They start with a D. I don't want to say who it is. But if you haven't built within 12 months, they will forcibly buy the block back from you at 95% of what you paid, irrespective of market growth. That's how serious they want you to build. Well, do you know why they want you to build? Because if you go bankrupt and a bank moves in to sell your block of land as mortgagee in possession, they'll just take whatever they can get, agreed? That could devalue the whole development. They will not allow that to happen. But what we've negotiated just for our members is something unique. That one line that says you must build within 12 to 18 months for our members' contracts has been removed. What have we done? We've had it what? Removed. Which means, listen to this, you never, ever have to build. Now, does anyone know the consequences of that? What does that mean? If you never have to build and everyone else around you has built, nice houses, owner-occupied, looked after, who lives in an area where an empty block of land is actually worth more than a house? Happens all the time. What that's called is called hypergrowth. Because people see a well-established area, good neighbourhood, they go, I'd love to live here, but I want my house. I don't want someone else's house. I want to design my house with my fixtures, my colour schemes. Because it's cheaper than buying an existing house, tearing it down, or remodelling it. Who understands that? So houses in well-established areas that are empty blocks of land, you get hypergrowth. This allows you to have hypergrowth. Do you understand the significance of this clause? Who do you think we did this for? Yeah, we did it for ourselves, and you guys get to tag along. All right, Jamie wants this, I want this, Conrad wants this. We want the best opportunity to long-term make the most amount of money. You get exactly the same contracts. Who thinks that's a really good reason to be a member? All right, that one thing alone will make you literally tens of thousands of dollars, right? And there's even a way, who'd love a way you can hang on to this block, even after you settle it 10 to 12 years, who'd love to be able to hang on to it with no money out of your pocket for 25 years? Who'd like to know how to do that? Well, it's called capitalisation of interest. I don't have time to explain it now, but literally the amount of loan amount that you owe at 8%, because the block is worth so much, you just add it each year. So you can afford to hang on to it. I worked out for about 13 and a half years before any money has to come out of your pocket. What do you think the block has done in 13 and a half years? It's doubled or tripled. Does that make sense? And then you can just keep capitalising. And by that stage, listen to this, the block sizes across the state have probably shrunk and you can probably subdivide the block, sell off half, get the other one for free. That's how you get the free block. Okay? So what we've done, oops, sorry, could you just pass me that? What we've done is we've actually set up a whole system. So it's not a block of land. You understand it's not just a block of land. It's a system around a block of land that we've put together. Right? It's price controlled, so you know for the next 25 years they're going to keep raising prices up and up and up. They're going to be the project manager. We've even negotiated a 3-day cooling off because in options you normally never get a cooling off. We've negotiated 3 working days. Why? Because we want our members further protected. All right? You can sell before settlement. You can sell after settlement. You can build a house and then sell it. You can build a house and keep the house. Whatever combination you want to do, there's no restrictions on you. All right? You can use whatever agent you want to sell it. You don't have to use us or anyone. You can do it yourself. Doesn't matter. It's up to you. We're here to help you as much as you want to be helped. So if you want to build a house, one of the things we'll do is we'll go on behalf of all of our members, including me, to builders in the area and say, don't give us a one-off price. Give us a 500 off price or a 2,000 off price. Do you think we'll get a better deal for house building for our members, yes or no? Who'd want to have a part of that? All right? This is what we do. All right. Look, here's an example. In that area, you could buy a block on average for 100K right now. Right? Through our membership, you could probably buy it at about 80K. If that's all the deal was and you were able to save 10 to 20% right now, would you be pretty happy with that? If you could make 10 or 20K on the way in that you could independently check and measure, would that make our membership worthwhile? Yes or no? All right? That's per block, by the way. Then the prices will keep incrementing up, and we think roughly at around 2014, that's when the rezoning will be done and dusted. The block should be worth between 135 and 150. Then it'll keep moving up and up and up until it gets finally towards 2022 when our members need to settle. Those blocks should be worth between 270 and 300. Now, how do you get into something like that? Well, you don't have to come up with a full 100K. You could start off with a very small amount, like 16.5K. Now, on a 100K block, 16.5K is not a lot of money. Would you agree? And here's the great thing. Rather than you having to come up with all of it at once, we've said to the developer, listen, we do not want to leave anyone behind. We want something that all of our members must and need to and should be able to take advantage of. So we got them to allow that 16.5 to be spread out over 90 days. So it's a little bit up front and the majority of it at the back end, 90 days later, which gives you time to save, sell some shares, refinance, revalue, whatever you need to do to get into that. So you actually start the transaction with $1,100. Is that an easy way to get into a property for $1,100, yes or no? So we've done that specifically because our members just literally have trouble affording $500,000 properties where you've got to pump in 120 to 130K to get into the market. Is that fair enough? All right? Now, then, in about 10 to 12 years later, you'll have to come up with the balance. Where will you get the money for the balance, do you think? Starts with a B. Bank. If you go to a bank and say, I have an asset worth, let's say $300,000, I want to borrow $60,000. That's a 20% LVR. Let's say it's a 25% LVR. Do you think if you went to a bank and asked for a 25% LVR, they would give it to you? Yes or no? You could be bankrupt, not working. They'll give you a 25% LVR because that's safe for them. Non-recourse loans are at 50%. They'll give you a 25% loan. I can guarantee that as a banker. I've owned a Bank of Queensland franchise. I know what banks are allowed to lend on. I know credit policy. 25% is a lay-down misère. You know, the only problem you'll have is they'll say, is that all you want? That's your only problem you're likely to have, literally. All right? So, how did I come up with that number? At 10% growth. What has this area been growing at? Who remembers? 11%. So I've said 10%. It's naturally been growing at 11%. But once they start doing developments, what will happen is you'll actually get artificial growth. As they release each stage, the value will keep going up. Who understands that? Show me you understand that and you're awake. Okay? Cool. All right. Listen to this. At 10% growth, which is below what it's been growing at, each block that you bought for 100K is now worth 313. Your net profit is 213 a block. But you didn't buy it at 100K, did you? You got a 20K discount, didn't you? So add 20K to 213. How much have you made? 233. Add to it the $100,000 you've saved in holding costs. How much have you made or saved? 313. Let me ask you a question. How many lots of 16,500 would you swap me for 300,000? How many? How many times did you do that transaction? Once, twice, 10 times, 100 times? How many times? But guess what? It gets better. Because the way we've structured it, and you've got to get your own tax advice on this, but that 16,500 normally as an option fee rolls over and forms part of the deposit. It's capital cost, not tax deductible. We've done it as a fee. So it doesn't roll over, but you buy the block of land for that amount less. So the total amount doesn't change. We've structured it differently. Have I said to you it's all about structure? Right? We've structured this in such a unique way, we had to get a QC opinion and say, yeah, you've got to do it this way. So that 16.5 for many people will be fully tax deductible. If it's fully tax deductible, you're in the top tax bracket, that could mean that literally you pay $9,000 and you get back the equivalent of 300,000. How many lots of $9,000 would you swap for 300,000? And look at this. If this block of land that's worth $100,000 grows at 11% per annum, you're making 11K. Agreed? How much does it cost you to get in? Maybe 16.5. But post-tax, it's probably about $9,000. If you've, for $9,000, made $11,000, what is your percentage return? Return on investment is, I don't have a calculator, but that's over 100%, isn't it? That's probably closer to about 120? It's actually over 120% per annum return. Who would like to make that 120% return? That's like 10% a month. That's like per week, what's that? 2.5% a week. Who would like to make 2.5% a week return passively for the next 10 years? Anyone? Where the heck can you get any sort of return like that? 2.5% is what a bank will pay you per annum. Seriously, right? Can you see what we've done in terms of structure? It's incredible. It's absolutely incredible. All right? That's at 10%. I pulled out the slides at 12% because you just wouldn't believe me. All right? How do we do this? We use option contracts. Repeat after me. Property options are similar but not the same as share market options. Repeat after me. Property options are similar but not the same as share market options. Some of you have heard about share market options probably through this weekend. They are similar but not the same. In fact, they can do some more things that share market options can't do. But basically, they're a legal right to buy something exclusively. So when you sign the option, you have the exclusive right to buy it or to sell it. It's your choice, all right? And you can on-sell your right without incurring double stamp duty in the Victorian jurisdiction, okay? So who could this work for? This could work for a whole range of people. Who's heard the term buy and hold? Who's heard of that term? Think about this. Normally when you buy and hold, you have to come up with a huge amount of capital up front, and you've got to pay huge amounts of cash flow throughout to get to the portfolio. Agreed? But what if there was a way to get the same result, to build a portfolio with not a huge amount of capital up front, but a small amount of capital, and no cash flow throughout, but the same result? Who thinks that would be incredible? Because guess what this is? This is exactly that. It's an opportunity, literally unique, to build a portfolio, get the same result, but do it completely differently. And you know what I worked out? That by the time you get to year 10 or 12, right, you're an LVR of 20 to 25%. If you build a house on it, the overall LVR is about 50 to 60%. That means it's positively cash flowed, you have equity left, and you've built a portfolio of 10, 7, 10, however many properties you want, without any cash flow issues throughout. You build the house when you can afford it, when you can afford to pay the stamp duty, and no more money comes out of your pocket. In fact, money comes in. Who thinks that's extraordinary? Because that's what it is, all right? And that's why we've structured it, not for you guys, for us, and you guys get to benefit if you want to step up to the mark, all right? This is great for a cash flow strategy. Some people want to sell. We've got people who've bought, a father bought himself and 2 sons memberships. They want to buy 21 blocks of land because they want to be selling blocks throughout. Why? Because then the profit they'll use, they'll use to come back on their capital, so the return on investment will be even higher. Who understands that? I'll explain it later on to you, all right? This is great. Even if you're a credit impaired, if you have a credit problem, listen to this very closely. This is why I'm so proud of this strategy. As a banker, I know that if a credit impaired person comes into me, I actually can't help them. The credit policy prevents me, right? If you've got a credit problem, I'm sad to say, but you're pretty much stuffed. If you go to any banker, accountant, financial planner, they'll say you're stuffed. This gives you a new chance. It allows you, with very little money, to be able to secure a property. You don't need to go to a bank. You don't need a credit check. Any credit problem will age off in either 5 to 7 years, depending what the problem was. And you are reborn. You are literally reborn from a credit perspective. You then have a good job, you start banking money. By the time you need a loan, which is 10 to 12 years away, you present to the bank like a blue chip A-grade client. Most other people say, well, wait till 7 to 10 years when all the things age off, then try saving and trying to get in the market. It's too late. The market has moved too much. Do you understand? This allows you the chance to get in now, to let time fix and heal any wounds, and then take full advantage, right? And I know this will help so many people, this strategy. Parents of children. Who has children? Anyone has children? Children, according to AMP, cost $1 million from when you start to when they leave, which is now mid-30s, I think. All right? They're called kidults, right? $1 million. But some of these children will not be able to afford to buy houses close to you. Or you may not be able to afford their education. Or you want to do this to specifically get them the heck out of your house, right? To have some capital there to give to them so they can buy a house or get educated. Some people who are getting older are scared about not having enough money to be able to fund their retirement and more specifically their aged care and medical expenses. Because people are living longer and the costs of living longer are going through the roof. So this is a strategy for some of those people. But this is also, and last one's probably the most incredible strategy. Who here is within, not the right question to ask, but if you're somewhere within 12 to 15 years of the age of 65, I want you to just think outside the square for a moment. Do you think buying land long-term is a long-term strategy that is compatible with super? Yes or no? Some of you may not know this, but super laws have been changed. I'm not here to give you information. I'm not here to give you advice on super, but I'll give you some general information. Some of the super laws have been changed to allow people to buy property. Who knew that? But not just property, but geared property. You can get loans to buy geared property. Who understands that? Right? Which is great. The other thing is, who knows how much the tax rate is when you hit 65 in super? Anyone know what the tax rate is? Starts with a Z, ends in euro. What is it? 0. Now, that's general information. You need to check it for your own situation. I'm not giving you advice. But think about this. If you bought a bunch of these blocks of land, then built houses on them, you've got huge capital gains, you hit 65, you bought them through your super fund, you hit 65, how much tax do you pay? 0. Who likes the sound of that 0 for capital gains tax? This is an incredible strategy that is so compatible with it. Normally, to buy properties in your super fund, you need a heck of a lot of money because properties are $500,000 at the moment. You can't build that size portfolio quickly and easily. This allows you to do that strategy and then to benefit with the 0 tax when you hit 65. All right? Is it incredible? Yes or no? Because it's a system. It's not just property. It's a system around property we've put together. Some people just want to be a millionaire. Great. Buy 6 blocks, sit back, do nothing else, just wait. And you can start doing that from about 30K plus GST. Would you swap 30K to being a millionaire? Yes or no? Hopefully you should. Right, so this is the pricing. The blocks of land in this area. Remember, how much is the Goulburn Valley? It's great value. It's equal 10th. It's 100 grand median price. These blocks of land are either 89 or 99. Depending on the size. The 300 square metres of the 89, the 450 square metres of the 99. You have to make a commercial decision. Would you pay 10 grand more for 50% more land? That's a commercial decision. I'm not going to try to preempt that, okay? If you are a member of Property Direct members, because we work for Property Direct members, right? Property Direct members get access to this at an extra 10 grand discount per block. So instead of 89 and 99, it's 79 and 89. Who thinks property direct membership's sounding pretty good already? Anyone? Okay. Now, similar areas selling 90 to 125,000. Here is option one. Option one is the smaller 300 square metre blocks. The price is either 79 for members or 89 for non-members. This is how the payment plan starts. Remember, we want to not leave anyone behind. Everyone needs to focus on this to make sure that they could take maximum advantage of this. We structured a deal with the developer on behalf of our members to allow them to get in with literally as little as $1,100 to start off with. $1,100. And then within 7 days, another $4,400. So $5,500 per block in the first 7 days. And then within the next 3 months, 11 grand. So it's only a small amount up front. That adds up to 16.5 in the first 90 days, and then the balance, which is either 62.5 for members or 72.5 for non-members, within the next 10 to 12 years. And that'll come from the bank anyway. Is that a very low entry point to get into the market? Yes or no? All right? Now, the other option for the bigger block, and I want you to look at the 90-day figure. For the 90-day figure, it's the only one that changes. So for the larger blocks, it's 16,500 in 90 days. So it's still 1,100 up front. It's still 4,400 7 days later, but it's 16,500 in 90 days. That adds up to 22,000 within the first 90 days. And then the balance, which is either 67 for members or 77 for non-members, is due at settlement, 10 to 12 years away. So the total outlay for the bigger blocks is either 89 for members or 99 for non-members. Does everybody understand that? Right? And you could do that in cash. We've had some people, listen to this, they start with cash for the first amounts and then over the next 3 months set up a self-managed super fund, refund the initial money to themselves and pay the balance out of super. All right? We can put you in touch with all the right people to set up in super. That's easy. All right? Some people pay the whole lot in cash up front, get the tax deduction, and then when it comes to the time, they'll actually then put it into their super fund. It's your call. It's an option. You have full decision as whether you sell it, whether you put it in your name, whether you put it in a family trust, you put it in super, whatever you want to do, or a kid's name, it's your choice. So, we have 3 levels of membership, right? Our 3 levels of membership, all 3 levels get exactly the same education and mentoring from myself and Conrad and the whole team of wealth coaches, right? It's about how much of a plan do you want. Do you want a 3-year, a 5-year, or a 7-year plan? If you don't have a plan, you need a plan. You know you need a plan to get from A to B the fastest, easiest way. This is what we help you. We use property as the vehicle. Why? Because we believe everyone needs to live somewhere. We know that people need houses, and houses are built on land. Does that make sense? But what we do is we do land an incredible way under our system, right? Every level has the same access to property sourcing, right? Same level to property sourcing. Whether you buy 1 or 100 houses, townhouses or apartments, doesn't matter. As much as the banks will lend you, you and your family members can use that property sourcing pillar as much as you want. Where they differ is this: how many blocks of land you can buy as a maximum, right? Whether it's for 3 years, maximum 3 blocks is 3,300 to be a member at that level. At silver, it's 5 years, 5,500. You can buy a maximum of 5 blocks, either in this development or throughout the period of time. Gold, 7,000 set for 7 years, 7,700, maximum of 7 blocks. Who thinks, even if they just bought 1 block, it pays for your membership? Can you see that? Who thinks the membership is incredibly good value for that period of time? All right? Come on, show me. Put your hands up if you believe it's great value. For those of you who didn't put your hands up, would you have me on your team for less than $1? Would you employ me for less than $1? Yes or no? Our membership works out to be $1,100 a year, roughly. For you and your partner, whether it's a beloved or a brother or sister, I don't really care. You choose. If you have got dependent children, bring them along. They get the same access under your membership. But we only communicate with 1 phone and 1 email address, right? You can share the DVDs. You can share coming to live events. We don't care. You can buy as many properties as you want. We don't care. The blocks of land are limited, though. For $1,100 a year, that works out to be $550 a person. Can I go to flip charts, please? $550 a person. That works out to be about $1.50 a day. For many of you who want to invest, for many of you, this will be tax deductible. For many of you, that works out to be about 80 cents a day. If you can do it cheaper, I'll follow your system. If you can get me deals like the one that we can do, I'll follow your system. But if you don't have a system, you're not getting the best results. And is time ticking, yes or no? Right? And everything we show you, I can show you all the due diligence. In fact, what I didn't show you is for this land deal, we have done more due diligence on this than probably any of our projects combined. This is over 1,000 pages of due diligence. Is due diligence important? It's the most important thing. We only look at that first before we do anything else. But when was the last time we did 1,000 pages? And most of that is from the local government themselves. So you can check it, you can double check it. You know that it's real. So ladies and gentlemen, stand up if you believe that you want to make 20K fast cash. Stand up. Who'd like to make 20K fast cash? Stand up if you'd like to make $250,000 long term. Stand up if you want to buy property and not have to make any payments for 10 to 12 years. Stand up if you're interested in properties where we can save you 20, 50, 100 grand on the way in. Who'd like any of those things? Well, what every single one of you need to do is follow me over there. You're going to fill out a form. You're going to fill out your details. If you've seen enough and understand, put your credit cards on there. If not, no problem. Fill out the details. I'm here. I don't normally see people anymore. I just speak. I'm too busy. I speak everywhere. But while I'm here, they've asked me to stay for 2 days because Conrad was supposed to be here. He was sick. They've asked me to be here. So if you want to pick my brain for your situation, to find out where you're at, to find out where you can go, you're going to get an incredible opportunity to spend about an hour with me. It'll be 55 minutes, okay? I'm going to ask you, when you sit down with me, I'm going to give you a financial fact finder. I want you to know whether you're winning and losing and which way you're moving. You will get a copy of this. I expect that you will fill this out before you come. I expect that you'll be on time, that you'll treat this seriously. I expect that if you have questions, you'll actually write them down. Because I want to maximize my time with you. I don't deal with people who are just curious, right? Even if our system is not for you, you need to take advantage of seeing me, seeing someone like me, to maybe give you one new idea that you hadn't thought of before, and you go, oh my God, because that could change your life. So I want every single one of you, follow me over there. You're going to fill out one of these forms. Then you'll see one of our staff. You'll make an appointment. The best appointment slots will go first. Come and grab a form. Fill out the membership. Some of you are already members. You don't need to do that. Grab a form. Fill it out. See our team. I'm here only for 2 days. Fill out a form, make an appointment to see me. Do not let this opportunity go to waste. There is no charge, there is no obligation, there is no commitment. I just want to make sure that you're serious. We're going to help you find out a new possibility. If membership is not for you and you fill out a form, I'll just tear up the form. It's no charge, it's no problem. This is a chance for you to find out how you can get blocks of land, make 20K on the way in. This is a chance for you to get land that's going to make you $250,000 long term. See what the possibilities are, grab a form, fill it out, make an appointment. I only have a limited number of appointment slots while I'm here. The rest will have to be done over the phone. It's better if I'm in front of you because I can draw pictures and diagrams. Grab a form, fill it out. As soon as you've filled out the form, make it legible. If you're here in a couple, please put both your names on there. If there's a female in your couple, could she preferably do the writing, please? It just helps. Print legibly, name, email, phone number. See Nikki, make an appointment. She will give you one of my cards. I don't normally give out my cards. You'll have my contact details. She'll give you a financial fact finder. I'll expect that you fill this out. Yes, they're during the day. Treat it like a doctor's appointment or a dentist's appointment. This is something you must do. You must find out for yourself what you can do, how you can move forward, how you can use the land as an incredible capital growth strategy to get you from A to B faster and easier with no cash flow out of your pocket. Welcome, ladies and gentlemen. I'm going to tell you about probably the most incredible opportunity that is available right now on the planet. And I don't mean this with any exaggeration. What I'm about to show you is something that is absolutely a game changer for you and for me and for everyone in this room. So I really want to acknowledge you for actually being here to listen to what I'm about to show you. You've actually all been given some articles, and these articles are from the front one is from today's paper about Australians going to the US and taking advantage of what's going on. Behind there is an article from the Financial Review, which is from the last weekend, that goes into even more detail. All right? So what I want to show you is
My name is Luke Camilleri. I'm 29 years old. I am in banking. I've been a mortgage broker or in the mortgage broking business for just under 10 years. I'd actually been researching for 6 months even before I met Kevin, so I sort of had an idea that the returns were going to be good. One of the things I was really, really excited about was the quality of property over in Phoenix.
Now, you actually picked up a fourplex, correct?
Correct. We think the value was about 200,000. I think it sold for 200,000 in 2006, so probably at the peak it probably would have been about 250, I would have thought.
And you paid how much for this property?
I paid 55, and then I'm putting another, say, 35 as a maximum in there. So we're looking at 90,000 as a maximum.
And what type of rent return?
We will definitely get, we think about 2,500 a month, 2,500 a month, so 30,000 a year. So, well, that's closer to 30% gross, isn't it? Really. The other property was a standard household dwelling with a pool. I picked that up for 57. I rent to a really nice family, so that'll be a good rental return. I think that will probably be closer to your 12%. The lawyer over there is fantastic, the rental manager as well. It's been really informative as well. That's the important thing to say. Once you're over there, you really get a feeling, and it actually builds your confidence, because the process from start to finish has been informative, been thorough, transparent, everything that I wanted it to be. And it's made it so easy for me to say, hey, let's go ahead and get moving.
There is literally starting to be an avalanche, a stampede of Australians going to the US. Why? Because in the US, you can get access to properties at incredible prices. Now, some of you have heard about this, but let me give you an example. What if you could buy for 25,000 Aussie dollars a property in the US that gave you a 25% rental return? Who would just think that's incredible? Right? That's just unbelievable. In fact, I'm going to have to ask you something tonight. You need to change your mindset, because I'm going to share with you some things that just, from an Australian mindset, do not make any sense at all. Literally won't make any sense. You won't understand. Like, you could say, how the heck is that even possible? All right? So what we're going to cover tonight is I'm going to talk to you about these 4 things. The history of the US property market, a strategy specifically to invest in Phoenix, and I'm going to explain to you why Phoenix is the choice. I'm then going to talk to you about our partners over there, and it's called Total Property Solutions. And then I'm going to talk to you about investing in the US market via 21st Century Property Direct, using our property system for the US. So a little bit about the history of the US property market. This is what United States property prices have been doing. Can you see a particular trend there? It's gone up really sort of fast, but then it's dropped quite substantially. Can you see that? That's US prices, adjusted for inflation and normal house prices. This is what Phoenix has done. In fact, Phoenix has dropped further than the trend for all of US. Now, some people say, well, I'd love to buy properties in Texas, because I hear Texas is pretty good. Well, let me tell you the problem with Texas in comparison to Phoenix. Texas property prices haven't grown much. They've been very stable. They've trended upwards, but they haven't grown really fast. And consequently, they also haven't dropped very far. Now, as an investor, do you want a little opportunity, or do you want a lot of opportunity? A lot. Which one? Come on, little or a lot? A lot. A lot. Well, in the case of Phoenix, can you see that from the top to the bottom, there is a lot of difference? These are the sort of places we are looking for. But you could easily make the mistake of looking for any place like that in the US and be caught in places where literally the businesses that used to be there have used the GFC to shut down their business completely and move some divisions away to other cities, never to return. So some of the jobs in some parts of the US cities have been lost and will never return to those cities. Do you think that's an important economic consideration? Yes or no? Of course it is. So, look what's been happening. There's been a surge of toxic mortgages from mid-2000 to mid-2007. You can see all the different colours there, the subprimes, etc., of what's been going on. These are some of the house prices. These are some of the specific cities. And you can see that there's been quite a number of cities that have had these huge bumps. The problem is that we have many different criteria what we look for. And the number one criteria we look for is there's been a big upsurge, big downfall, and there's been a strong, consistent, resilient rental market. To put some numbers around this, let me show you. You have some places in the US where properties were, and specifically in Phoenix, if I can just go to the flip charts, were $250,000. And they have dropped to maybe $50,000. In some cases, $70,000. In some cases, even more than that. So that represents a drop of up to 75%. When was the last time you purchased anything that was a 75% drop? And here's the miracle part about it. The rentals haven't dropped by much. So even though they used to be getting, 3 to 5% rentals, their rental dollar figure hasn't dropped much, but because the price has, it means the percent yield has jumped to 10, 15, 25%. Who understands why? Because the base price has dropped so much. That's the miracle of what's going on there right now. Now, do you know in the US, it is in most places cheaper to own than it is to rent? By far. But you see, people in the US can't get loans. Many people have had their houses repossessed or their FICO scores weren't that high, so there's no way they're going to get a chance to be able to buy, and they are forced to rent. Who understands that? The other thing that's happened is because they've lost their homes, they have to rent, but many of them are moving to where there are jobs. When you move to a new location where there are jobs, are you going to buy immediately? Even if you can afford to buy, will you buy immediately? Don't you want to get the lay of the land, go past probation, make sure that the job is secure and what you want, and then you start looking for a permanent residence, correct? So this is why even people are choosing to rent until they actually find their feet and they're really certain again, okay? Now, does this give you an idea of the rate of foreclosure, right? It is going through the roof, right? Consistently rising. Now, just to put a number on this, the current number of houses that are currently in default in the US is about 7 million. Do you know that represents, if you added up probably every house in major cities such as Sydney, Melbourne, Brisbane, probably Adelaide and Perth as well, that's how many houses are in default at the same time. You can't get your head around this. See, Australia's a population of about 21 million. Over there they have over 300 million. You can't understand, your brain can't function to say, what, every house in Australia in a major capital city is in default. We can't process like that. But that's the equivalent number that they have in default right now. This is how big the problem or the opportunity, depending how you want to look at it, is. Is that vast or what? All right, they have approximately 300,000 new houses per month go into default. We're only scratching the surface with how many properties that our members want to actually buy. 300,000 houses a month are in default. All right? Look, there's plenty of graphs to keep showing what's going on. But at the moment in the US, it's not just a garage sale, it is a fire sale. Who likes the sound of a fire sale where you can take advantage of that? Anyone? Oh, come on. Who wants to make some money? Show me. All right? So in the US, what's going on is this. We have partnered with a team of people over there. We have done comprehensive due diligence before we did all the partnerships over there to see who would meet our requirements. Let me tell you, the people that we have actually partnered with in these selected areas have been doing this for a long time. In fact, the main group we're working with, they have been doing this for over 10 years. They are what's called a super wholesaler. A what? Super wholesalers usually only deal with wholesalers who then deal with distributors and real estate agents, right? All the middlemen that often are retail facing, all right? They also sometimes deal with large institutions. These people buy between 300 to 500 properties a week in cash. Are you at that level? We're not at that level. These people, you want to be at that level, right? But these people, they do quick turnover. Properties only stay on their books for like a couple of weeks or a month at a time. That's it. Guess who they sell to? Other wholesalers and other little middlemen. But they won't deal with you unless you're buying 50 to 100 at a time. They're just not interested. They'll pass you on to people much further down the pecking order. What do you think happens to the selection much further down the pecking order? Do you get the best ones if you're much further down the pecking order? And what do you think happens to the price much further down the pecking order when everyone adds their margin? You're paying much, much more. Who understands? All right? So, we've created these strategic alliances with these companies that have been doing it for over 10 years. In fact, when this company started doing this in the US, foreclosures represented less than 0.1% of the entire property market. And then so they built their relationships on that. They specialized in that niche. And then along came the GFC, and they were in a better position than anyone else to take advantage. So they already had the systems, the connections, and the processes in place, and the people. They just ramped up their business. Who understands? All right? So they grew very rapidly because of this, because they could actually deliver these results. And what I mean by results is some of you may not understand. In Australia, when a property goes into mortgagee possession, the bank has the right to take it, and then they get a valuation, they sell it at auction. In the US, there is no such requirement. The bank just takes it and they sell it. They can sell it to whoever they choose to. It's theirs to sell. Is that a difference? It's a huge difference. So many of these properties are sold at auctions on county court steps. But now there's so many of them, or inclement weather, they actually do them indoors in one of the offices, right? When you go to some of these places, unless you can prove that you're either a US citizen or a green card holder, and or you can buy a certain number of properties with cash immediately, you probably won't even get in the door. Does that make sense? You just can't even get in the door. And they have them in every county all over the place. Imagine how much money it would have cost you to be on the ground for 12 months, researching the market, have a team there with you, attend all these different county auctions. What would that have cost you? Because that's what we've spent. Why? For our members. Who are our members? Us, including me, because we want an incredible system to help our members get incredible results over there. What we're planning to do is a US due diligence tour. Picture this. Imagine being side by side with me and all of the Property Direct team. I mean all of them, because all of us are going there in January. We want to clean up. We want to go berserk. We each want to buy 20 properties, right? Who wants to buy 20 properties with us, right? We want to go over there. We want to buy whole streets or suburbs together. We're actually going to be on the bus. We're going to be going around all of Phoenix. We're actually going to be looking at all the different areas, the different types of properties. We're also going to get some of the best people teaching us. We're going to get a company. Who's heard of Philip Fox? Anyone heard of Philip Fox? They're the number 3 law firm in the world in terms of size, right? They belong to a big conglomerate, and it's their parent company. Those people will come along and explain to us everything about the right structures in the US, as well as the dual tax treaties and the best way to repatriate money and vice versa. So we've got the right people in the US, but we also have a group over here. They're based in Melbourne who have already been helping Australians do this already. They'll be teaching us. They're accountants, they're financial planners, they're solicitors. All of these people will be on your team teaching you everything you need to know. In fact, they will not be allowed to leave the room until every single question is answered, right? So do you think that would be very valuable? To be fully educated, then be on the road, looking at all the sites. In fact, one of the testimonials that I'd love to show you is a young gentleman called Luke. And Luke is a mortgage broker who's 29, who's based in St Kilda. And he just bought, actually I can tell you the numbers. He just bought what's called a fourplex. A fourplex is 4 properties jammed together under one roof line, right? He bought a fourplex for $55,000. 4 properties, 2 2-bedders, 1 3-bedder, and 1 1-bedder. $55,000. Now, he's going to do a renovation on it. He believes the renovation will cost him about $30,000 for all 4. That's about $85K. He's worked out his numbers based on the monthly amounts that he'll get on all 4 properties. He'll make $30K per annum. What do you think his return is per annum? Gross, it's over 30%. The properties that are higher density, lower land, same as in Australia, they get higher yields, right? But they have less potential growth in them, right? They're apartments or multi-unit sites. The houses, they usually grow more, but the yield is lower. Who understands that? All right? So it's the same concept, but the numbers are just crazy over in the US, right? He sold his Australian properties because he was doing negative gearing and not getting very far and really struggling, right? He went over the US, he's looked at lots of different cities, and he actually understands that one of the things that we can provide is access to not just the properties, but more importantly, he actually says in his interview, to a team. Because it's so important when you're looking at properties from far away to have the right team, the right accountants, the right solicitors, all of these sorts of things. To give you an idea why a team is so important, you can actually go to the US right now, and if you applied for an ITIN number, which is like a tax file number, it could take you 6 to 12 weeks. Then you get your bank account. It takes a long time. We, through our team, can get it done in 48 hours. Now, is there a benefit to that? You bet there is. Because if you can have that set up before you have the property in there, then a whole lot of your other expenses can be claimed through that. I'm not going to go into too much detail, but some of you know what I'm talking about, right? Rather than setting it up afterwards. There could be a huge tax benefit in setting it up in the right order. Let's just leave it at that. So, who would love to look at properties that have dropped by 50 to 75%? Be shoulder to shoulder with us looking at those properties. Who'd want to be on that tour? Right? Imagine spending 5 to 7 days driving around, having all your questions answered, getting educated, and we're actually going to get the mayor of Phoenix to come along. We're also going to get the head of the economic development group of Phoenix to come along to tell us and show us who are they bringing, who are they poaching from other cities to bring into Phoenix. Now, just so that you know, Phoenix is a very safe city. It's got a lot of education there. It's got a lot of families there. It's much safer than somewhere like a Los Angeles. In Los Angeles, there's places at night you just would not go, right? There's streets and streets of them. In Phoenix, there's probably a couple of streets that you feel a bit sort of cautious going to, but that's it, right? Phoenix is much, much safer because of the demographic. It is also the home of 7 out of the top 100 Forbes companies. Intel is there as well. Has anyone heard of Intel? Do you think Intel might be producing some more stuff in the future? In this area, Phoenix has a huge amount of sunlight. The US is pushing green technologies. Guess where they're going to be actually doing a lot of the research? At the universities and places where the sun shines a lot. It shines a lot here. In fact, Phoenix has one of the largest universities in all of the US. Arizona State is one of the largest ones there. In fact, one of our colleagues was over there and they were driving along and he said, "Oh, when will we get to the university?" He goes, "We've been driving through it for the last 10 minutes. It is that big. 68,000 people attend the university. Like, as I said to you, we can't understand the numbers. They are so much bigger than the numbers we have here. Does that make sense? All right. So on this tour is a week-long tour with me, with Conrad, our whole team, with all of our US team and our US liaison. We have got them to set up an Australian and American team here in Australia. Same time zone. They're based in Melbourne, in South Melbourne specifically, to answer any questions. They have a complementary team in the US, right, that look after all of us when we go over as well. Because they have a belief that once you actually understand the lay of the land, once you've been around, you may not need to go back every single week or month or quarter. This young guy, Luke, he now wants to buy a property there, similar to this. He wants to buy one there every quarter. Do you think he needs to go back every quarter? No. In fact, the other property he bought on the last tour was a $50,000 property as well, but it had a brand new swimming pool which was worth $20,000. Who thinks that's really good value then? Right? Now, he won't get such a high return. He won't make a 30% return, but he believes he'll make probably a 12 to 15% return. Would that still be okay? Yes or no? All right? So, who would love to join us on a $5,000 tour? If we paid for your airfares, if we paid for your accommodation, if we took you on the bus, if we introduced you our contacts and you got first pick of some of these properties, who'd want to do that? All right? Well, I'll tell you about qualification in a moment. All right? US tax laws. We've worked closely with some of the specialists over there and here to work out what's best for you, because if you went to an ordinary tax specialist in the US, They would say to you, well, this is the best structure that we know of. Yes, that's true for US-based citizens, not necessarily for Australians. This is why we've got the right people in Australia and the US who talk to each other. Who thinks that would be valuable, right? Because you may not know this, but you might be able to quarantine some of your money there, tell the ATO and say it's over there, it's quarantined under the dual tax treaty. That might be perfectly acceptable because tax rates in the US are, guess what? They're lower than they are here. Who likes to pay less tax? Anyone? All right. Do you know in the US, in Australia, if you went searching for a property, that's not a tax deduction. To visit an existing property, it is. But under US tax laws, it is tax deductible. So your company over there could send you literally all over the world for the rest of your life investigating properties, whether you buy or not. Who likes the sound of that? You see, this is why it's important to have the right structure and the right people advising you, because you could design the life you choose and have the tax office pay for it. Who likes the sound of that? Anyone? But you wouldn't do anything just for the tax reason, of course. You want to make the money. You want to make the capital growth. You want to make the cash flow return, correct? But it's nice to have those extras thrown in. Now, in Australia, what we do is we have a very specific 52 points of criteria for every property that we look at. Over there, they have a very detailed checklist as well, but theirs is different to ours because different things happen there than they happen here. Similar, but it's different. So what they'll do is they'll show you and teach you all that due diligence. In fact, their team is so big, whenever what's called a tape of properties, which is actually a list of properties, goes up for foreclosure, they actually send a whole team of people, 15 people, out on the road. They go and inspect every single property and upload that information so the person who's going to be bidding knows which properties are good, which ones are no good, right? Because it's not just any property. Because you have to then bid on it. You win it, you have often 24 to 48 hours to come up with all the cash immediately. The reason the banks work closely with our team members over there and our partners is because they've got the cash and they buy from the banks literally 300 to 500 properties a week. The banks are very happy dealing with them. They have a very close working relationship because they solve the bank's headaches. Who understands that? The banks want to purge themselves right now of toxic mortgages and toxic property deals, right? And they want to start afresh. What's going to happen in the US is they are completely redoing the banking and lending laws. Do you know about this? Once they do that, lending will go through the roof. And that's what's on the front page of this article. It actually says, once Americans can lend again, they will buy homes in droves. That's what will actually happen. You understand that will happen. When they start buying in droves, what will happen to the price of properties? They'll go up real fast, okay? So, through our partners over there, our partners are willing to do a whole lot of things for our members. Look at these. They are willing to do property selection. Based on the same criteria, they will make sure that we get the best deals. They will also help us get finance. There's a test for this. Are you willing to do the test? Put your hand out. Everyone take out your hand. All right? Face it towards you. Palms towards you. Hold it close to your face. Do you feel any breath? You qualify. We are guaranteed to get, listen to this, guaranteed to get lending for our members. Do you know how significant that is? US people can't even get lending. So our members will get up to 75% LVR loans. Do you know what that means? Instead of buying with your money one property, instead of buying one of these with cash, what if you could buy 4? What if you could buy 4? Does that give you potentially 4 times the upside for when the market returns? Yes or no? That's the interest rate could vary from anywhere from 3.99 up to 12%. But even if you paid 12%, would you pay 12% for 5 or 6 months and then be able to refinance because now you've got a FICO score? Would you do that? Oh, well, great. Well, if you got one, you might qualify for some of the lowest rates. All right? Some people don't have a FICO score, but think about this. Even if you paid at a higher interest rate for 12 months and made the repayment every month, built up a score, and then you could refinance to a much lower rate, maybe 3 or 4 or 5%. Would that be okay? Because you could, do you know you could get loans for up to 30 years in the US at really low rates? That's insane. All right? So we can help you do that. Now, one of the things they also do is they do refurbishments and repairs. Now, they don't normally do this. This isn't normally part of their business because most of the stock they get, 90%, is they flip. To who? To wholesalers, to middlemen, to real estate agents, and to institutional buyers. But we have said that our members specifically want to hold properties long term. Why? Because they're not flippers, they're buyers and holders. Because Australians are very interested in making the cash flow number one. Number two, they're interested in the long-term buy and hold and the potential capital upside. Who would agree with that? Right? Why sell a good asset to someone else when you can get all the future capital growth? That's my question to you, right? Now, what they're willing to do is for our members is to actually build up their refurbishment team. They call them a rehab team. And I said, well, for us, rehab means you rehabilitate people, you renovate properties. For them, it's just, well, we rehabilitate houses. So, but anyway, they thought we were weird. I thought they were weird. Doesn't matter. What they're willing to do is do what are called rehabs up to a rental level. That means a new lick of paint and often new carpets, that's it. So they have a team that goes in, they do a clean, they do a repaint, recarpet, bang. But they're willing to do that for us on a wholesale basis. Now, do you understand that if you went over there and you did it yourself and employed people, you could be in violation of visa requirements. You could get thrown out and you might not be able to go back to the country. You understand that, right? So it's important to understand what you can and can't do. But they can do it for you. You can still get quotes from other groups, but they will do it fast, efficiently, and they'll do it at a wholesale price. You can use them or not use them. It's your call. As Property Direct, we're always there to help you as much as you want to be helped. Does that make sense? But here's the really cool thing about it. If you are willing to get it refurbished to a minimum standard for good rental, then we have done a deal with them. They don't offer this deal to any of their other members, any other people they deal with. They are willing to give you a rental guarantee for the next 10 years. Can you imagine if your property rents at 15% per annum? Imagine getting that guaranteed 15% for the next 10 years as a minimum. Would that make a difference to your wealth and your ability to earn income and to buy future properties? Yes or no? Yes. It's a huge difference. Remember, they are not willing to offer this to any of the other clients they have on their books as property managers, only to us. Why? Because of the bulk we have said that we can do with them, right? And they've seen how many people are on our database. This group has never done any sales or anything like this through seminars. They actually don't understand this, right? They just sell to wholesalers. That's all they do. They get a whole lot, they chunk it up, and they sell it to wholesalers. We have said, because our members love property, and because of the parity Aussie dollar, and because we can get them financed, that they will buy at the same volume level as a wholesaler. Who understands that? So for them, it's just another wholesaler. But what they like about it is because our members want to hang on to the properties, that they can actually do some more renos, add value, and they'll earn a small margin on that. But also on the property management side, they earn margin for a long time to come. Who understands that? Right? So they're very happy with that. They're willing to give it a shot. And they've said if it works well, they want to work with us on a broader basis. And that's very exciting to be the first company to deal with this joint venture with them on that basis. Now, some of the other things we can do is we can organise insurance, the solicitors, the building pest inspectors, the accountants, setting up the US bank accounts. All of these things we can actually negotiate and get set up for our members. Now, just to show you where Phoenix, Arizona is. Phoenix, Arizona is right there. It's about an hour's flight from LAX, not far from Las Vegas as well. That's what it looks like. It is a big city. Just to give you a perspective, it is the 5th biggest city in the US. We're not talking little backwater here. 5th biggest city, right? Now, in Arizona, we've identified Arizona as our primary market. We've looked at a whole lot of economic indicators. The main one is we pick cities that grew fast, drop substantially, but have a strong economic base and a very strong resilient rental market, because we know they will be some of the first to rebound. You can go to places like Detroit and Ohio and a few other places, and you can buy properties there that have gone up and fallen dramatically. But if half the population has left that area, never to return. If businesses have shut in Detroit, never to return. What do you think the economic future of that place is? Pretty bad. Who would agree with that? Okay? So, our partners allow you to actually buy properties, not just at the lower market price, because that's what it used to be, but the retail for this property could be, for instance, $70,000. And if you went through their lower tier sub-wholesalers and distributors, you might pay 70 grand, which would still be excellent value, agreed? But because you're getting it direct from the super wholesaler, they only make a small amount of money on each property, somewhere in the order of like $5,000 to $6,000. Because why? They need the money to actually secure them, hang on to them. They need to often do a very small reno. They need to pay for their people going out. I don't mind them making a small amount of money, as long as I know that I'm buying at a really good price. These prices are literally below bank vals and or below government valuations, right? So you're buying at an incredible price in the US market, but you're doing it in a way that's under a system that's actually very, very safe. So let me tell you more about that. In fact, in the US market, you can start investing through our partners from as little as $25,000. In fact, if you bought one of these at $50,000 and you managed to be able to get a 75% loan, how much do you actually put in? If you qualify for a 75% loan, how much do you put in if you bought a 50K property? $12,500. Do you know some people pay more in stamp duty and get nothing for it? Imagine getting a whole property for that's positively cash flowed. Phoenix, Arizona. Our network allows people to get access to properties, as I said, 10 to 20% below current market valuations, and that is well below government and bank valuations at the time. Here are some of the key reasons. Look at these numbers. Low prices, 3 and 4 bedroom, fully refurbished houses. And when I mean refurbished, I don't mean like the Taj Mahal, like you want to sell to an owner-occupier. This is basic new lick of paint, cleaned, new carpet if required. All right? Maybe just steam clean. All right? $49,000. Through other systems, you would have to pay 100% cash for that. Through our system, you can do it with up to 75% LVR. For the same money, you could buy up to 4 times as many properties, have potentially 4 times the upside. That's the huge opportunity. Some of these prices are 75% below what they were just 2 to 3 years ago. And let me tell you, some of these properties are only 3 to 5 years old. I'm not talking a completely dilapidated wreck. I'm talking some of these are 3 to 5 years old. And some of them are 5 to 15 kilometers from the city. I'm not talking out in the middle of the desert. I'm talking 5 to 15 Ks. So these are pretty good properties by any standard. All right? So we predict there's going to be a huge capital appreciation. When the US market starts to move again, we believe they'll at least go back to where the prices used to be, and they'll continue eventually moving on. That will take some time. I believe that probably about 50% of this price will come back in about 2 years. Just 50% of its value. I believe just to its old value, it'll take 5 to 6 years. But if the property is paying for itself and giving you positive cash flow, is that going to hurt or is that going to be pleasurable? It's going to be good. You're going to be getting money. You can afford to hang on to it for 5 or 6 years, can't you? Because it's making you money. Who understands? Is that a much better way than a negatively geared property? You bet it is. All right? So mortgages, we guarantee through our partners, we've been guaranteed because of their finance contacts that all of our members will be able to get finance. Now, not everyone will get 75%, but even if you got 50 or 60%, would you be happy with that? Because instead of buying one, you could buy 2. Would that still be okay? One of the other things we've negotiated with them is we've said to them that our members want to buy through self-managed super funds. We have managed to get from them, simply because of our bulk. Other people just can't do this, full stop. We've been able to get from them the ability to get a CIS-compliant super loan. So you understand that super funds can buy properties and they can get loans. They have to be very specific loans, worded a very specific way. Do you understand that? And if it's not compliant, you're in big trouble, right? It's too hard for people buying one-offs. No bank in the US would lend you money full stop, let alone for a super fund. They won't do it for you. We, through our bulk and our leverage and our relationship with them, have managed to negotiate that you can. Up to 50% LVR, get a loan through your self-managed super fund over there. Who thinks that's incredible? Right? That is just truly amazing, because that allows you to get twice as many properties literally in your self-managed super fund, or get in much earlier for much cheaper. Now, the rents in that area, ex-homeowners have turned to rental accommodation. I gave you all the reasons why. $850 to $1,000 a month. This means, in comparison to the Aussie market, where you'd be losing net about 5% a month, you're making 10 to 15%. That's a 15 to 20% difference in terms of cash flows. You understand? Instead of being negative, you're actually positive. For the same amount of outlay, instead of being negative, you're positive. All right? Why else? Cash flow is king. You need cash flow. Cash flow is like oxygen for an investor, right? It allows you to do so many more things, to buy more properties, to get involved with other things as well. All right? I'm going to share with you some of the things they've said about Arizona in reverse chronological order. It's the 4th best city in the United States for expansions and relocations. It is the best place for business and careers. It is the 2nd best city in the nation for business expansions. It is the 3rd best city for relocations in 2009. Maricopa County in 2009 population is estimated to be 4.2 million, about the size of Sydney. That's just one of the areas of Phoenix. It's not Phoenix. Do you understand how big this place is? Right? And it ranks 4th amongst the nation's counties and is it has greater population than 24 of the states in the US. Phoenix is the 5th largest city in the entire USA. All right? Since the early 90s, Arizona has experienced tremendous population and job growth, and it's grown 24% since 2000. The state has been among some of the top performers nationally in job creation for several decades. Do you think that's an important characteristic? Do you think people there are good at attracting businesses, which reinforce the local economy, which keep people busy and working and paying taxes, state, local and county? Yes or no? This is why it's a prosperous place. They have listen to this, they have an average age of 34. Why is that significant? What do people do when they're around 30s, early 30s? What do? They have babies. When people have babies, are babies expensive? Yes or no? So, guess where they'll be pumping all this money into for their children? Into the local economy. Who thinks that's a very important aspect of the economic cycle there? Right? So this is why it's so important. This is why if you went to places like Florida, where people have a median age in some parts there of 60, they're not going to be spending a lot and pumping money, and they're not going to be having babies, correct? This is why it's so important to understand these economic drivers and what they mean. All right? They're expecting 60% population growth there. Look, Phoenix, one of the other things that you don't understand about Phoenix, is a major tourist hub. Now you think, why Phoenix? Has anyone heard of a place called the Grand Canyon? Yeah, we have a rock here big enough that can fill it. The Americans didn't think that was very funny, by the way. Uluru, right? But do a lot of people, do you think, go to the Grand Canyon on a regular basis? Americans love to travel within America, right? So there's a huge amount of people, of tourists, that go there each year. In 2008, Sky Harbor, which is their largest airport, serviced 40 million passengers. So it's about twice the population of Australia went through their airport one year. Like, I'm telling you, you can't get your head around some of these numbers. They are this big. All right? Now, just to show you some numbers, this is Phoenix. Look at the median house price of what happened to property prices in Phoenix. They went up and they came down sharply. All right? They're the sort of places where opportunity lives. What lives there? Come on. Opportunity for you to make money. If you want to make money, you need to find places that go up and fall fast, because people there are still in fear. They're still scared and they can't get money from the banks. But do you think soon that the fear will go away? Do you think the money will start becoming available? Do you think people will rebuild their FICO scores? Guess what will happen to these property prices then? They'll go up a lot. This is why there is only a 6 to 12-month opportunity in Phoenix, right? Property prices there have already started to edge their way up. There are places in the US that have fallen equally, but they're going to stay down for a long time. There are other places that already have these green shoots. And let me tell you, other people have started noticing that Canadians are the biggest group buying in Phoenix right now, right? Because they've got good credit and they can buy in the US very easily, no problem. Their banks will lend them money, right? There are some institutional investors that are targeting Phoenix as well. So I'm telling you, you want to make some money, you want to make some of this upside, you better start acting within the next 6 to 12 months. Otherwise, the game will be over. This is a complete game changer. You can't get access to property deals in Australia where you can get this level of growth, a 500% return in growth in the next couple of years. It's just impossible. You can't do that sort of thing in Australia. This is a unique opportunity that will not last. Now, even in bad times, recession times, the population of Phoenix and its population growth did not go negative. A lot of other places went negative. Phoenix, even in the worst times, it still grew, but grew at a slower rate. Why? Because of the university. How long do people go to universities for? 3 to 5 years, correct? And a lot of people in the US have realized that they need to massively reskill and fast. Where do people go to reskill? Universities. And in many cases, they get grants from the government, right? And they have to repay these student loans over a longer period of time. But they get those loans that allows them to go to these universities and pay for their lifestyle there. So this place has got a very diverse economic base. We have education, we have tourism, we have a lot of other companies, the Forbes 100 companies that are there as well. Our partners there is a group called Total Property Solutions. Let me tell you a little bit about them. They understand the importance of offering really good US property deals to our members, right? So these properties, a lot of them, listen to this, are already tenanted. Think about this. If you buy a property already tenanted, giving you 10 to 15% return that's guaranteed for 15 years. Are you pretty happy? Like, talk about no stress. And if they guarantee the rent for 10 years, understand this. They become your tenant, and they're effectively subleasing. True, you have a tenant, but really, you're leasing to them. You don't care whether there's a tenant or not, do you? If they're paying, they're effectively your tenant. Who understands? All right? So this is why this is such an incredible opportunity that we've negotiated for our members. They will look after the refurbishments. They will make sure the refurbishments go to plan. They look good because they're the ones offering the guarantee. They need to know the refurbishment's done properly because otherwise they're trying to pay you rent when they can't get enough rent. So we've done what's called a risk reversal. We've put the risk back on them, so they're going to make sure the refurbishment's done quickly and it's done well enough to rent that property for 10 years. So is that peace of mind or what? Right? Also, they got value-added services. They got a whole team of accountants, solicitors, people they deal with on a regular basis. These people will make sure that you get your ITIN number, which is like your tax file number. They'll make sure you can set up your bank account. They'll put you in touch with all the right people that you need to make this smooth and easy for you. We've got the same people here in Australia as well who work with them. Property management. Do you know in some parts of the US, you could buy a property on the internet tomorrow? Do you know in some of those parts, there are no property managers. There is no one to look after your property. And in some other parts, the property managers are unregulated. It's not like Australia. If you want to actually have a real estate office in Australia, you get a real estate agent's license, right? Or a sub-agent's license. Whether you're in property management or sales, you need that license. Who understands? In the US, a lot of the real estate agents or realtors are just salespeople. They don't do rentals. Rentals are ad hoc. It's not regulated. So some places you go do not have rental people. Some of the places do have rental people will not go into the property you've just bought. Because unlike Australia, in the US, you could literally have a beautiful property. Across the road, you could have a gang home. Right? You could literally, across the road, go 10 levels of demographic down. Doesn't happen in Australia. It's much more homogeneous, and also it spreads out or changes much more slowly. In the US, you cross the street, you could be in a really bad neighborhood. Does that make sense? So we had a situation where someone bought a property that we know of, right? It wasn't through us, but they bought it on the net, and they didn't know why they couldn't get a property manager to help them. They couldn't get any rent because the gangbangers running meth coke labs were in the rest of the building. They were too scared to go in. So how would that work for you? Wouldn't work very well, would it? Okay? Some people that I know bought some cheap properties, but what they didn't realise in the northern suburbs, it's bitterly cold, and in those properties they ripped up all the floorboards and they made fires. Some other places, unless you actually insulate and look after the pipes, they freeze and they burst. Can you imagine replacing all the plumbing on a property? Do you think that would cost a bit? Yes or no? This is why a lot of people in the northern areas are moving to the southern areas, because it's less maintenance, it's cheaper, but more importantly, the cost of oil, heating oil, has been going up dramatically. And when people don't have money, they don't have money to pay for this. They want to move to warmer, drier climates. Does that make sense? This is why these southern areas that are warmer, particularly if they're dry, are actually getting such a strong population shift to them. And because you've got employment there, they're not just moving there for the climate, they're moving there for the job opportunities. Who's understanding that? All right? Now, what we want is a system to make it entirely hassle-free, and that's what we've done by having the right team in place. No maintenance. They look after all of this. You give them, just like in Australia, pre-authorization to this level. Anything above that, they'll call you. Now, what will also happen is you can still get independent quotes, but isn't it nice to have the opportunity for them to look after everything if you choose to? Yes or no? All right? And it's in their best interest because they are giving you the rental guarantee. The mortgages, we've organised for all of our members to be able to get and qualify for mortgages. That's incredible. Just about everyone else in Australia who's going there is having to pay cash. Our members can get 2 to 4 times as many properties with the same amount of cash, and that's amazing. And some of those with potentially FICO scores may qualify immediately for up to 75% and as low as 3.99% loans. All right, we are getting pricing and discounts based on super wholesaler levels. We're offering clients up to 75% discount off the previous highs of 2008. And that's still 10 to 20% below what current market is. You can't do this cheap or easy yourself. You just can't. You don't have the time or effort to drive around all the different counties, inspect all the properties. This is why you need a system. You need people on the ground. This is what we can do. And we're doing this for all of our members. Maintenance-free, rent guaranteed period. No hassles, no problems. They pay. Whether you've got a tenant or not, they're going to make sure that your property has a tenant first because they don't want to pay, obviously. All right? After sales support, they have gone to the trouble of setting up an Australian-based office in South Melbourne. It's literally a couple of streets away from our head office. All right? They come in the office often. We talk about what we need to do, and they're very easy to talk to. They understand the US market and the Australian market. US bank account, once you've set up one and you've provided your equivalent of 100 points of ID, and they'll help you through that whole process, you can just set up more very easily on the telephone or via fax. Super easy. Australian accountant will help you understand the double tax treaty and all the different options you have to maximise your position within that. It's literally a turnkey model. They don't do this anywhere else in the world. We've set up a system with them that makes it super easy, and they want to work with us, make this work, so they can do it again and again, and we will partner with them through other parts of the world, starting with Australia, then New Zealand, and then Asia as well. Okay? Now listen to this. They are using their own money to literally buy properties on behalf of our members who will come across in the January trip, right? So they have a large belief in us that our members are serious and want to buy, because they're going to be buying properties and holding them longer than what they normally do on behalf of our members. Right? Because we've said to them that our members, they want to get into this market, they want to get some of the best deals. Would you like to see some of the deals? Would you like to see some of the numbers? Yes or no? Come on, you excited? Look at this. Look at this property. Purchased in February. Which year? Which year? 2010. This year. So how many months ago? About 9 months ago. $50,000 US. So that's a little bit less in Aussie dollars. Right, take off about 1 or 2%, that's Aussie dollars. Look at this, it's a 3-bedroom, 2-bathroom. This is a practically new house, it's only a couple of years old. 50 grand. It previously sold in mid-2007 at $183,000. Probably went up to sort of mid-200s. You are getting a gross return of nearly 21% rental return. Who'd be happy with that? All right, look at this one. I like this one even more. Look at this. It's a 3-bedroom, 1.5 bathroom, sold in March which year? This year. March this year. This could have been a property you bought. $23,000. Our initial people had to pay cash. We hadn't had the loan set up. $23,000. Would you still be okay paying 23 grand? And getting a 35% gross return. Last time it sold was at $70,000 in late 2008, but it was 135,000 in 2004. Would that be an okay deal? Yes or no? What about this one? 3-bedder, 1 bathroom, $39,000. Its rental return is 23,000 or 23%. Look at this one. This one's also sold, was 19% rental return. It was 150,000. It was a 4-plex. This one was much newer than the one this other guy bought. Didn't need any renovation, and it last sold for 220,000 in December 2005. Look at this one. I don't like, it's got arches, but you know what? It's not what I like. I got to not get emotional. I don't like the Californian sort of arches. It's about the numbers. What's it about? The numbers. Look at these numbers. Gross rental return, 18%. Purchase price, 45,000. Last resale, March 2006, 170. So this probably went up to mid 200,000s as well. Look at this one. 20% return. This is like a townhouse. $46,000, last sold for $143,000 in December 2007. This one, look at this, is like a brand new house, or close to it. It's $81,000, gross rental return 14%, last sold for $215,000 in May 2007. You've probably seen the trend. The houses are more expensive than the townhouses, which are more expensive than the apartments, right? But the apartments give you a higher rental return as a yield percentage than the townhouses, than the houses. Same sort of concept in Australia, but the numbers, like take a zero off Australian numbers, and that's what you're paying over there. Is that extraordinary or what? That's just unbelievable. Look at this one. This one sold. This is an apartment. It's a 2-bedroom, 1-bathroom apartment. Would that be okay? In Australia, in St Kilda, that's how much stamp duty you'd pay. You're paying full price, $32,000. Thank you very much. Last sold May 2006, 129. So at the peak, it probably was about $180,000. You're buying for 32. Gross rental return 26%. So what you need to do is you need to start investing in literally one of the most profitable markets in the world. The US is the most profitable at the moment. Why? Because you have so much potential upside. Not growth, but I'm just talking returning to where it used to be. Has the US stock market already returned pretty much to where it was? Yes or no? Right? And that sort of thing leaks over into other areas. When people get certainty and confidence in the share market, guess what? It'll start returning to the property market. And it'll start returning as soon as the banks start lending money. As soon as they redo the new laws and they purge themselves of these toxic loans, that market will go nuts. That's why you have an opportunity of only 6 to 12 months. So, I've just covered that. Once they start lending, and also the other amazing thing right now is the Aussie dollar buying more. See, a couple of things have come together, and these will probably never come together again in your lifetime or mine. All right? Number one, in the US, they have had some of the cheapest, easiest money available. That's caused them a huge problem. Property prices there have fallen by 50 to 75%. Even in the Great Depression, they didn't drop that much because they didn't have this extraordinary level of lending. Careless lending is really what happened. Does that make sense? So that's come together. Number two, it's meant that properties have purged right down. Another reason it's dropped so much is in the US, they have a lot of the loans are what are called non-recourse. What are they called? Non-recourse. What does that mean? It means that in Australia, when a bank closes you down on a property, if you still owe money, they chase you. They'll bankrupt you. Understand? Yes? The US, you can hand back the keys. It's called jingle mail. They send you you send an envelope to the bank, it jingles. Why? Because your keys are in it. The bank cannot come after you. It'll affect your FICO score, sure, but they can't come after you. So people just say, hey, property's upside down, here's the keys, see you later, I'm out of here. You can't do that in Australia. These people paid incredibly high prices for their properties because they got money so easily. Why? Because Wall Street got too smart for itself and said, you know what? We will start lending money through a securitization process to people that we know can't afford it for property prices that are way above what they should be, but we don't care. Why? Because we will bundle that up into what's called a subprime loan and we'll immediately off-sell it to all these other people. So we're not responsible. So their only motivation was to what? Make more money. They didn't care who they lended at what price. That just meant more money. Whereas banks, on the other hand, who understand that the buck stops with them, they still have tight credit policy, just like they do in Australia. All right? But because of everything melted down, they got caught up in that as well. Does that make sense? All right? Australia didn't have that happen. So as soon as the US market purges itself, as soon as they redo the banking, as soon as, well, a couple of other things will happen, but in Australia, we are in a position where we have a strong Aussie dollar. It used to be 58 cents to the dollar, now it's $1.01. We actually have a very strong economy. So the financiers over there are actually happy to lend to Australians. Do you know why? Because we're considered a good credit risk, right? Also, over there, the banks aren't lending locally. People don't have the money. Even though they want to buy, they can't buy. Also, the properties have dropped so much. So many things have literally come together. This will not happen again. You have a window of 6 to 12 months. You have to think, if you want to make, how many of these uplifts do you want? 1, 2, 5, 10? You have to ask yourself, you have to do whatever it takes to be over there in the US at one of our courses with us, going shoulder to shoulder with us, with lots of other investors, buying as many properties as you can humanly buy. That's what you need to go through your mind for a cash flow perspective. All right? So, imagine this. Imagine if you could retire on just one property, and I mean the equivalent of one Aussie property. That makes you the whole Australian salary. One average Australian property is about $550,000. If you got a 10% net cash flow return on that, that's $55K. You're retired, you're done. You can do whatever you want for the rest of your life. The equivalent of one property, you could do that with in the US. The equivalent of one Aussie property. That's just incredible. All right? And you could attain loans of up to 75%, as low as 3.99%. You could even buy property in your self-managed super fund with only 25K. You could obtain a positively return on your property, 7 to 10,000. Normally in Australia, a property costs you money. Imagine you getting 7 to 10,000 in your pocket each year per property. That would be extraordinary, wouldn't it? All right, and getting a rental guaranteed for up to 10 years. And a 10-year buyback guarantee. Think of this. If your property was giving you a 20% net return per annum, how long does it take that property to pay itself out? 5 years. So over 10 years, it's paid itself back 2 times. At the end of that 10 years, you can say, here's the property back, give me my money back. If you wanted to. Wouldn't it be nice to have that opportunity if you wanted to? If you wanted to. How much faith do you think they have in their property market and where it's going for them to be willing to do a 10-year buyback? They know in 10 years it's going to be up here. They'll be happy for you to hand it back. They wouldn't offer this unless they have absolutely convinced of what's going on in that market. You know that? You know why they know that? Because they have connections with the government and the economic development people, so they know that market is going up and up and up. Who thinks that's pretty important? All right? So, look at this. Imagine if you could make 800% return in just 5 years. How would you do that? Well, if property prices there have made a recovery from their historic lows just to where they were, not growth on top of that, but just to where they were, right? Like the stock market's making a recovery. So if you had $25,000 in equity, you got a 50% loan, and you bought a property that used to be $250,000 in 2008, right? In 5 years, if the market recovered to just that level, you've made 200K on your 50 grand, right? That's an 800% return in 5 to 6 years. You can't do that in the Australian market. You just can't. It's impossible. And you've got a property making you cash flow all the way through, so you don't have to worry about that. So, this is just incredible. But it's only because of what's happening. As I said, so many unique things have come together to make this happen. This won't happen again. Not in your lifetime, not in my lifetime. If you don't take advantage of this, I bet you, I guarantee you, you'll be kicking yourself. You'll say, yeah, I heard about the US. Damn, I should have done something about it. I should have. You'll shoot all over yourself. Right? Opportunities like this really don't come around very often. This is a chance to completely reinvent yourself and your position, your assets, your liabilities, your cash flows. It's a complete game changer. That's what this is. All right? And on top of that capital growth, imagine still getting that rental return. So what we're doing, They said, let's do tele commercials, infomercials in the middle of the night. Let's tell everyone about it. We said, are you kidding? That might work in America. Australians don't like infomercials. We said the best and smartest way is we'll take our most committed members over there, right? We will film them in the field, learning, acting, taking action, right? We'll put them in front of the camera, we'll put them on stage, and we'll tell them to tell everyone their story of what they learned and how real it was. And they said, great, well, we'll bring them over. This is the budget. We could take 50 of them. And we said, you know what? Our members don't need to fly the business class or premium economy. They'll go cattle class, right? They don't need to stay in 5-star hotels by themselves. They'll do 3-star twin share. If you want to pay extra to have your own room, that's on your cost. That's on your dime, as they would call it, all right? So that's allowed us to take 88. We're going to take 88 of the most committed people who want to get the best results. 88 people, all right? To get this literally once-in-a-lifetime opportunity. Why? Because property prices there are already starting to rise. Who wants to be in that first 88? Show me, come on. Who wants to be in that first 88? Well, let me tell you, it's pretty much fully subscribed. But we've got another one coming up a couple of weeks later. For that one, we are going to take the first 39. The first 39 to qualify, we are going to give them a scholarship. We are going to pay for you. Do you know the best way to lower your risk is to physically do it yourself, to inspect it, to see it, to be there before you make any decision? We and them are so confident of what you'll see that you'll just be blown away. We're going over there, we're going to be buying 20 each. That's what we're going to be doing. You want to join that? You want to be part of that? Yes or no? So, stand up who wants to be part of this tour. Stand up, show me. Who wants to come to the US for $5,000 for free? Me paying it, not you. Come on. Do you want to come with me or not? Everyone who's standing up, you want to come with me? Leave your credit cards behind. Come to the table. Follow me. I want you to write down your name, your email and address. The people who fill out these forms, you'll be the first people notified so you can come and join us on this tour. Grab a form, fill it out. If you're here in a couple, just put both your names on there. Please print neatly. We will have a whole one-day event here in Brisbane, as well as Sydney, Melbourne and Perth. We'll bring our team out. We'll have other experts here. We'll have other clients who've actually purchased already, and you'll hear all this information. You'll be able to ask questions, find out what this opportunity is and how you can take advantage of it. If any of you want to make money, you need to get over here, fill out a form. There's no obligation, there's no charge. We want to pick the people that are serious, not just the people that are curious. We want people we can work with on a long-term basis to get a great result with. And let me tell you, if I'm going to sponsor you coming over and pay your scholarship, we're going to put a camera in your face. We're going to ask you to tell people exactly your experiences, the service we've provided, to make sure that you can help other people. Because we know if you've said that you've had a great time, you've learnt, you've bought some great deals, the next time we show this to people, they will go nuts. We'll get 10 times as many people. We'll start filling jumbo jets on the way over to the US. And just grab a seat. I want to just cover one last thing with you because I know this question will come up and I want to make it really clear. Some people will say, well, I want to do land or I want to do properties or I want to do blocks of land. In fact, you should be asking yourself, how do I do all the things that are applicable to me? That's what the consultation's about. What we found is that for a capital growth strategy, that's where the land fits in. It's an incredible capital growth strategy. The US properties fit into being an income strategy, right? And in fact, this is my circle of wealth. Up here you've got equity, down here you've got cash flow. It starts with a job. The job feeds into capital growth asset. As you have properties that grow, that generate you equity, you borrow that out, you have further income. More income gives you more cash flow as you buy more property. They complement each other. It's not one or the other, right? This is what you've got to understand. In fact, we have other properties that you saw through property sourcing. We have so many different things. It's like going to an ice cream parlor with lots of different flavors and then trying to pick which one you want. You want a bit of all of them, correct? So this is why you have a chance to sit down and speak with me. You have a chance to maybe explore some ideas. If some of this makes sense to you, we'd love to have you as a member, and we want to coach you, help you, mentor you, and push you, because we will push you for the next 3 to 7 years to get those results. but it's up to you. So do not waste this chance to see me. Book in a time. Come prepared. Write your questions down, and let's see if we can both work together for your and our continued success. Ladies and gentlemen, I want to thank you very much. Thanks for your time. All the best.